Question 1. When considering life insurance policies in Delaware, what are some distinguishing features of term life insurance policies? A. Term life insurance policies offer cash value accumulation. B. Term life insurance policies provide coverage for the insured's entire lifetime. C. Term life insurance policies typically have lower initial premiums compared to permanent life insurance policies. D. Term life insurance policies offer flexibility to adjust the death benefit over time. The correct answer, C. Term life insurance policies typically have lower initial premiums compared to permanent life insurance policies. Explanation. In Delaware, as in most states, term life insurance policies are known for their affordability, particularly in terms of initial premiums. These policies provide coverage for a specific term, such as 10, 20, or 30 years, and do not accumulate cash value like permanent life insurance policies. The premiums for term life policies are often lower because they only provide death benefit coverage for the specified term, without the cash value component or lifelong coverage characteristic of permanent policies. This affordability makes term life insurance a popular choice for individuals seeking temporary coverage to protect against specific financial obligations, such as mortgage payments or education expenses, during their working years. However, it's important to note that premiums for term policies may increase at the end of each term or upon renewal, typically at a higher rate as the insured ages or if they renew the policy after a specified term. Question 2. In Delaware, what distinguishes universal life insurance policies from other types of life insurance policies? A. Universal life insurance policies offer fixed premiums throughout the policy's duration. B. Universal life insurance policies provide a guaranteed minimum interest rate on the cash value component. C. Universal life insurance policies allow policyholders to adjust the death benefit and premium payments. D. Universal life insurance policies do not require medical underwriting for policy issuance. The correct answer, C. Universal life insurance policies allow policyholders to adjust the death benefit and premium payments. Explanation. Universal life insurance policies, available in Delaware and other states, offer policyholders flexibility in managing their coverage and premiums. Unlike whole life insurance policies, which have fixed premiums and death benefits, universal life policies allow the policyholder to adjust these aspects over time to suit their changing needs. Policyholders can increase or decrease the death benefit within certain limits and adjust premium payments, subject to policy conditions and available cash value. This flexibility makes universal life insurance attractive for individuals who anticipate changes in their financial circumstances or insurance needs over time. Additionally, universal life policies typically offer a cash value component that earns interest, which may vary based on prevailing market conditions or a guaranteed minimum interest rate specified in the policy. This cash value can be accessed by the policyholder through withdrawals or policy loans, providing additional financial flexibility. Question 3. What features distinguish whole life insurance policies in Delaware from other types of life insurance policies? A. Whole life insurance policies offer flexible premium payment options. B. Whole life insurance policies provide coverage for a limited term. C. Whole life insurance policies include a cash value component that grows over time. D. Whole life insurance policies do not require a medical examination for policy issuance. The correct answer, C. Whole life insurance policies include a cash value component that grows over time. Explanation. Whole life insurance policies, available in Delaware and across the United States, are distinguished by their combination of lifelong coverage and cash value accumulation. Unlike term life insurance, which provides coverage for a specific term, and universal life insurance, which offers flexibility in premium payments and death benefit adjustments, whole life policies provide coverage for the insured's entire lifetime. Additionally, whole life policies include a cash value component that grows over time, typically on a tax-deferred basis. This cash value accumulates as the policyholder pays premiums, and it may earn interest or dividends, depending on the policy type and insurer's financial performance. The cash value component of whole life insurance policies provides policyholders with several benefits, including a source of funds for emergencies or opportunities, potential supplemental retirement income, and the ability to access policy loans. However, it's essential to understand that withdrawals or loans against the cash value may reduce the policy's death benefit and cash value growth if not repaid. Whole life insurance is often recommended for individuals seeking long-term financial protection and asset accumulation, as well as estate planning purposes due to its guaranteed death benefit and potential tax advantages. Question 4. In Delaware, what distinguishes variable life insurance policies from other types of life insurance policies? A. Variable life insurance policies offer a guaranteed minimum death benefit. B. Variable life insurance policies provide a fixed cash value component. C. Variable life insurance policies allow policyholders to invest premiums in separate accounts. D. Variable life insurance policies have fixed premium payments throughout the policy's duration. The correct answer: C. Variable life insurance policies allow policyholders to invest premiums in separate accounts. Explanation: Variable life insurance policies, available in Delaware and other states, offer policyholders the opportunity to allocate premiums into separate investment accounts. These accounts function similarly to mutual funds and allow policyholders to invest in a variety of investment options such as stocks, bonds, or money market funds. The cash value of a variable life policy fluctuates based on the performance of the underlying investments, meaning it can potentially grow or decline over time. Unlike whole life or universal life insurance policies, which offer guaranteed or fixed cash value components, the cash value of variable life insurance policies is subject to market risk. While variable life insurance policies offer the potential for higher returns compared to traditional permanent life insurance policies, they also come with greater investment risk. Policyholders bear the investment risk and must carefully consider their risk tolerance and investment objectives when selecting investment options within their variable life policy. It's important for individuals considering variable life insurance to understand the investment options available, associated fees, and potential tax implications. Question 5. What distinguishes final expense insurance policies available in Delaware from other types of life insurance policies? A. Final expense insurance policies provide coverage for a specific term, such as 10 or 20 years. B. Final expense insurance policies offer high death benefit amounts suitable for estate planning purposes. C. Final expense insurance policies are typically sold with simplified underwriting requirements. D. Final expense insurance policies allow policyholders to borrow against the cash value component. The correct answer: C. Final expense insurance policies are typically sold with simplified underwriting requirements. Explanation: Final expense insurance policies, also known as burial insurance or funeral insurance, are designed to cover the expenses associated with a policyholder's funeral, burial, or other final arrangements. In Delaware and other states, final expense insurance policies are often marketed to individuals who may not qualify for traditional life insurance due to age or health concerns. These policies typically have simplified underwriting requirements, meaning they may not require a medical exam or extensive health information. Instead, insurers may rely on answers to health-related questions on the application to determine eligibility. Simplified underwriting makes final expense insurance accessible to individuals who may have pre-existing health conditions or other factors that would make obtaining traditional life insurance challenging. While final expense insurance policies may offer lower death benefits compared to other types of life insurance, they provide peace of mind knowing that loved ones will have financial assistance to cover final expenses. It's essential for individuals considering final expense insurance to review policy terms, coverage limits, and any exclusions to ensure the policy meets their needs and budget. Question 6. In Delaware, what is a key feature of the accidental death benefit rider offered with life insurance policies? A. The accidental death benefit rider provides coverage for death resulting from illness or natural causes. B. The accidental death benefit rider offers coverage in addition to the policy's base death benefit. C. The accidental death benefit rider requires additional premium payments for coverage. D. The accidental death benefit rider is automatically included in all life insurance policies. The correct answer, B. The accidental death benefit rider offers coverage in addition to the policy's base death benefit. Explanation. The accidental death benefit rider, available with many life insurance policies in Delaware and other states, provides an additional death benefit if the insured's death is caused by a covered accident. Unlike the base death benefit of the policy, which applies to death from any cause, the accidental death benefit rider specifically covers death resulting from accidental injuries, such as car accidents, falls, or other unforeseen events. This rider offers policyholders and their beneficiaries added financial protection in the event of a fatal accident, supplementing the policy's base death benefit. It's important to note that the accidental death benefit rider typically requires an additional premium payment, which varies based on factors such as the insured's age, coverage amount, and risk factors. Policyholders should carefully review the terms and conditions of the rider, including any exclusions or limitations, to understand the coverage provided and any additional costs involved. While the accidental death benefit rider can enhance the overall protection offered by a life insurance policy, it's essential for individuals to consider their specific needs and circumstances when deciding whether to add this rider to their policy. Question 7. In Delaware, what is a significant feature of the critical illness rider available with life insurance policies? A. The critical illness rider provides coverage for routine medical expenses. B. The critical illness rider offers a lump sum payment upon diagnosis of a covered illness. C. The critical illness rider supplements the policy's death benefit for accidental death. D. The critical illness rider guarantees premium waivers during periods of illness. The correct answer, B. The critical illness rider offers a lump sum payment upon diagnosis of a covered illness. Explanation. The critical illness rider, available with many life insurance policies in Delaware and other states, provides additional financial protection by offering a lump sum payment to the insured upon diagnosis of a covered critical illness. These illnesses typically include conditions such as heart attack, stroke, cancer, and organ transplant, among others, as specified in the policy. The lump sum payment provided by the rider can be used to cover medical expenses, supplement lost income during treatment, or address other financial needs arising from the critical illness diagnosis. Unlike health insurance, which typically covers medical expenses directly related to treatment, the critical illness rider provides policyholders with flexibility in how they use the funds received. This rider is particularly valuable for individuals concerned about the potential financial impact of a serious illness on their savings or ability to meet financial obligations. It's important for policyholders to review the specific conditions and limitations of the critical illness rider to understand the coverage provided and any exclusions that may apply. Question 8. What distinguishes the disability income rider available with life insurance policies in Delaware from other types of insurance coverage? A. The disability income rider provides coverage for short-term disabilities only. B. The disability income rider offers a lump sum payment upon diagnosis of a covered illness. C. The disability income rider replaces a portion of the insured's income if they become unable to work due to disability. D. The disability income rider guarantees premium waivers during periods of disability. The correct answer, C. The disability income rider replaces a portion of the insured's income if they become unable to work due to disability. Explanation. The disability income rider, available with many life insurance policies in Delaware and other states, provides valuable income protection by replacing a portion of the insured's income if they become unable to work due to a covered disability. Unlike the critical illness rider, which provides a lump sum payment upon diagnosis of a covered illness, the disability income rider offers ongoing monthly payments during the period of disability, typically until the insured either recovers, reaches a maximum benefit period, or reaches retirement age. These monthly payments help policyholders maintain their standard of living and meet ongoing financial obligations, such as mortgage or rent payments, utilities, and other living expenses. The amount of disability income provided by the rider is based on a percentage of the insured's pre-disability income, as specified in the policy, and may be subject to a maximum benefit amount. Policyholders should carefully review the terms and conditions of the disability income rider, including any waiting periods, benefit periods, and definitions of disability, to understand the coverage provided and any limitations that may apply. Question 9. In Delaware, what is a key feature of the long-term care insurance rider available with life insurance policies? A. The long-term care insurance rider provides coverage for routine medical expenses. B. The long-term care insurance rider offers a lump sum payment upon diagnosis of a covered illness. C. The long-term care insurance rider guarantees premium waivers during periods of illness. D. The long-term care insurance rider covers expenses associated with long-term care services. The correct answer, D. The long-term care insurance rider covers expenses associated with long-term care services. Explanation. The long-term care insurance rider, available with some life insurance policies in Delaware and other states, provides additional coverage for expenses associated with long-term care services. These services may include assistance with activities of daily living, ADLs, such as bathing, dressing, eating, toileting, and transferring, as well as skilled nursing care or supervision due to cognitive impairment. Unlike traditional health insurance, which may provide limited coverage for long-term care services, the long-term care insurance rider offers policyholders more comprehensive coverage specifically tailored to their long-term care needs. This rider helps policyholders protect their savings and assets from the potentially high costs of long-term care, which can quickly deplete savings if not adequately planned for. Policyholders should carefully review the terms and conditions of the long-term care insurance rider, including coverage limits, benefit triggers, and any waiting periods, to understand the scope of coverage provided and any limitations that may apply. It's important to consider long-term care needs when selecting life insurance coverage, particularly for individuals concerned about the potential financial impact of long-term care on their retirement savings and estate planning goals. Question 10. In Delaware, what is a notable feature of the spousal or child term rider commonly attached to life insurance policies? A. The spousal or child term rider provides additional coverage for the insured spouse or child. B. The spousal or child term rider allows the policyholder to convert term coverage to whole life coverage. C. The spousal or child term rider offers accelerated death benefits for terminal illness. D. The spousal or child term rider provides term coverage for the insured spouse or child at a lower premium. The correct answer, D. The spousal or child term rider provides term coverage for the insured spouse or child at a lower premium. Explanation. The spousal or child term rider, available with some life insurance policies in Delaware and other states, allows the policyholder to add term coverage for their spouse or child to their existing life insurance policy. This rider provides an additional layer of financial protection by extending coverage to family members, typically for a specified term, such as 10 or 20 years. One notable feature of this rider is that it often allows the insured to secure coverage for their spouse or child at a lower premium compared to purchasing a separate policy. However, it's important to note that the coverage provided by the rider is typically term insurance, meaning it does not accumulate cash value and may expire at the end of the specified term. Policyholders should carefully review the terms and conditions of the spousal or child term rider, including coverage limits, premium rates, and any exclusions, to understand the extent of coverage provided and any limitations that may apply. Question 11. In Delaware, what is a critical aspect of the underwriting process for different types of insurance, such as property, liability, and health insurance? A. Underwriters assess the insured's health status and medical history. B. Underwriters evaluate the potential for loss or damage based on the insured property's characteristics. C. Underwriters review the insured's driving record and claims history. D. Underwriters analyze the insured's financial statements and credit history. The correct answer, B. Underwriters evaluate the potential for loss or damage based on the insured property's characteristics. Explanation. In Delaware and other states, the underwriting process for different types of insurance, including property, liability, and health insurance, involves assessing various risk factors to determine the appropriate coverage and premium rates. For property insurance, underwriters evaluate factors such as the location, construction materials, occupancy, and condition of the insured property to assess the potential for loss or damage due to perils such as fire, theft, or natural disasters. Similarly, for liability insurance, underwriters analyze factors such as the insured's occupation, business operations, and past claims history to assess the risk of liability exposure and potential legal liabilities. In contrast, health insurance underwriting focuses on evaluating the insured's health status, medical history, lifestyle factors, and other risk factors to determine eligibility for coverage and premium rates. It's essential for underwriters to thoroughly assess these risk factors using appropriate tools and methodologies to ensure that insurers can effectively manage and mitigate risk while providing adequate coverage to policyholders. Question 12. What risk assessment tools and methodologies are commonly used in underwriting processes for insurance in Delaware? A. Actuarial tables and mortality curves are used to assess the insured's health status. B. Credit scoring models are employed to evaluate the insured's financial stability. C. Loss development techniques are utilized to estimate future property and casualty claims. D. Medical underwriting guidelines are applied to assess the insured's risk of illness or injury. The correct answer, C. Loss development techniques are utilized to estimate future property and casualty claims. Explanation. In Delaware and other states, underwriters use various risk assessment tools and methodologies to evaluate and quantify the potential for loss or damage associated with different types of insurance coverage. For property and casualty insurance, including homeowners, auto, and commercial insurance, underwriters often employ loss development techniques to estimate future claims based on historical loss data and industry trends. These techniques may involve analyzing loss ratios, severity and frequency trends, and other statistical metrics to project future claims experience and set appropriate premium rates. While actuarial tables and mortality curves are commonly used in life insurance underwriting to assess mortality risk and life expectancy, they are not typically utilized in property and casualty underwriting. Similarly, credit scoring models may be used in certain lines of insurance, such as auto and homeowners insurance, to evaluate the insured's financial stability and likelihood of filing claims, but they are not universally applied across all types of insurance. Medical underwriting guidelines are specific to health insurance underwriting and focus on assessing the insured's risk of illness or injury based on health status, medical history, and lifestyle factors. Question 13. In Delaware, what is the significance of using actuarial tables and mortality tables in life insurance underwriting? A. Actuarial tables and mortality tables help determine the insured's eligibility for coverage. B. Actuarial tables and mortality tables assess the insured's financial stability. C. Actuarial tables and mortality tables estimate the likelihood of the insured filing a claim. D. Actuarial tables and mortality tables assist in assessing mortality risk and setting appropriate premiums. The correct answer, D. Actuarial tables and mortality tables assist in assessing mortality risk and setting appropriate premiums. Explanation. In Delaware and other states, actuarial tables and mortality tables play a crucial role in life insurance underwriting by helping insurers assess mortality risk and set appropriate premiums. Actuarial tables provide statistical data on life expectancy and mortality rates based on factors such as age, gender, and health status. Insurers use this information to estimate the likelihood of the insured's death within a specific time frame, allowing them to assess mortality risk and determine the appropriate level of coverage and premium rates. Mortality tables, on the other hand, provide more detailed data on mortality rates across different demographic groups, enabling insurers to refine their risk assessment and pricing strategies. By leveraging actuarial and mortality tables, insurers can ensure that premiums are adequate to cover potential claims while also remaining competitive in the market. It's essential for underwriters to use these tables judiciously and in conjunction with other underwriting criteria to accurately assess mortality risk and provide affordable coverage to policyholders. Question 14. What role does underwriting play in determining policy premiums and coverage for insurance in Delaware? A. Underwriting determines the insured's eligibility for coverage based on health status. B. Underwriting evaluates the insured's financial stability and creditworthiness. C. Underwriting assesses the likelihood of the insured filing a claim and sets appropriate premiums. D. Underwriting ensures compliance with state regulations and insurance laws. The correct answer: C. Underwriting assesses the likelihood of the insured filing a claim and sets appropriate premiums. Explanation: Underwriting, in Delaware and across the United States, plays a vital role in determining policy premiums and coverage by assessing the risk of insuring the applicant and setting appropriate rates based on that risk. Underwriters evaluate various factors, including the insured's age, health status, occupation, lifestyle, and past claims history, to assess the likelihood of the insured filing a claim. Based on this risk assessment, underwriters determine the level of coverage offered and the premium rates charged. For example, applicants with higher risks, such as older individuals or those with pre-existing health conditions, may be charged higher premiums or offered limited coverage compared to lower-risk applicants. Conversely, individuals with lower risks may qualify for more comprehensive coverage at lower premium rates. Underwriting helps insurers maintain a balanced risk pool and ensure that premiums reflect the level of risk assumed by the insurer. By accurately assessing risk and setting appropriate premiums, underwriting helps insurers manage their financial stability and fulfill their obligations to policyholders. Question 15. How does cash value accumulation work in permanent life insurance policies in Delaware? A. Cash value accumulation is guaranteed to grow at a fixed interest rate specified in the policy. B. Cash value accumulation is funded by policy dividends distributed by the insurer. C. Cash value accumulation grows tax-deferred based on premiums paid and interest credited. D. Cash value accumulation is accessible to the policy owner as a lump sum payment upon policy surrender. The correct answer: C. Cash value accumulation grows tax-deferred based on premiums paid and interest credited. Explanation: In Delaware and other states, cash value accumulation is a key feature of permanent life insurance policies, such as whole life and universal life insurance. Cash value represents the savings component of the policy, which grows over time based on premiums paid and interest credited by the insurer. One of the primary advantages of cash value accumulation in permanent life insurance is that it grows tax-deferred, meaning policyholders do not pay taxes on the cash value growth until they withdraw funds from the policy. This tax-deferred growth allows the cash value to accumulate more quickly compared to taxable savings accounts, providing policyholders with a source of tax-advantaged savings and potential supplemental retirement income. Policyholders can access the cash value through withdrawals or policy loans, which are typically tax-free up to the amount of premiums paid. However, it's important to consider the potential impact of withdrawals or loans on the policy's death benefit and cash value growth, as unpaid loans and interest may reduce the amount available to beneficiaries. Additionally, policyholders should review the specific terms and conditions of their policy to understand any surrender charges or other fees associated with accessing the cash value. Question 16. In Delaware, what is the consequence of surrendering a life insurance policy early, particularly concerning surrender charges and penalties? A. Surrendering a life insurance policy early incurs surrender charges and penalties. B. Surrendering a life insurance policy early results in a reduction of the policy's death benefit. C. Surrendering a life insurance policy early requires the policyholder to purchase a new policy. D. Surrendering a life insurance policy early allows the policyholder to avoid paying future premiums. The correct answer, A. Surrendering a life insurance policy early incurs surrender charges and penalties. Explanation. In Delaware, as in other states, life insurance policies often include surrender charges and penalties for early termination. When a policyholder surrenders their life insurance policy before the end of its term or before the policy has accumulated sufficient cash value, the insurance company may impose surrender charges as a form of penalty. These charges are designed to recoup the insurer's expenses, such as sales commissions and administrative costs, incurred at the time of policy issuance. Surrender charges are typically highest in the early years of the policy and gradually decrease over time until they eventually expire. It's essential for policyholders to understand the surrender charges and penalties associated with their life insurance policy before making the decision to surrender it prematurely. Additionally, policyholders should consider alternative options, such as policy loans or partial withdrawals, to access cash value without incurring surrender charges, if available and appropriate for their financial situation. Question 17. What are the implications of taking a policy loan against a life insurance policy in Delaware? A. Policy loans reduce the policy's cash value and death benefit. B. Policy loans do not require repayment, as they are considered advances against the policy's cash value. C. Policy loans accrue interest, which must be repaid to avoid reducing the policy's cash value and death benefit. D. Policy loans increase the policy's cash value and death benefit over time. The correct answer, C. Policy loans accrue interest, which must be repaid to avoid reducing the policy's cash value and death benefit. Explanation. In Delaware, policy loans are a common feature of permanent life insurance policies, such as whole life and universal life insurance. Policyholders have the option to borrow funds from the cash value of their life insurance policy through policy loans, using the policy itself as collateral. While policy loans provide policyholders with access to cash value without surrendering the policy, it's important to understand that policy loans accrue interest, which must be repaid to avoid reducing the policy's cash value and death benefit. Failure to repay the loan and accrued interest can result in a reduction of the policy's death benefit and may ultimately lead to policy lapse if the outstanding loan balance exceeds the cash value of the policy. Policyholders should carefully consider the terms and conditions of policy loans, including interest rates, repayment schedules, and potential tax implications, before taking out a loan against their life insurance policy. Additionally, policyholders should explore alternative options for accessing cash value, such as partial withdrawals or surrendering paid-up additions, to minimize the impact on the policy's long-term performance. Question 18. What rights do policy owners have regarding changes to beneficiaries, assignment, or transfer of a life insurance policy in Delaware? A. Policy owners have the right to change beneficiaries, but they cannot assign or transfer the policy. B. Policy owners have the right to assign or transfer the policy, but they cannot change beneficiaries. C. Policy owners have the right to change beneficiaries, assign, or transfer the policy, subject to certain limitations and conditions. D. Policy owners do not have any rights regarding changes to beneficiaries, assignment, or transfer of the policy. The correct answer, C. Policy owners have the right to change beneficiaries, assign, or transfer the policy, subject to certain limitations and conditions. Explanation. In Delaware, policy owners typically have certain rights regarding changes to beneficiaries, assignment, or transfer of a life insurance policy, although these rights may be subject to certain limitations and conditions outlined in the policy contract and state regulations. Policy owners generally have the right to change beneficiaries at any time, provided they follow the procedures specified by the insurer and comply with any requirements outlined in the policy contract. Additionally, policy owners may have the right to assign or transfer ownership of the policy to another individual or entity, such as a trust or family member, through a formal assignment process. However, assignment or transfer of a life insurance policy may have tax and legal implications, and policy owners should seek guidance from a qualified financial or legal advisor before proceeding. It's essential for policy owners to review the terms and conditions of their life insurance policy carefully to understand their rights and obligations regarding changes to beneficiaries, assignment, or transfer of the policy. Question 19. In Delaware, what are the different annuity payout options available to policyholders? A. Fixed annuity and variable annuity. B. Life only, joint life, period certain, etc. C. Immediate annuity and deferred annuity. D. Single life and joint and survivor annuity. Correct answer. B. Life only, joint life, period certain, etc. Explanation. Annuities offer various payout options to policyholders, allowing them to customize their income stream based on their needs and preferences. In Delaware, common annuity payout options include life only, joint life, period certain, and life with period certain. Life only. With this option, the annuity pays income to the annuitant for their lifetime, with no guarantee of payments beyond their death. This option offers the highest payout but ceases upon the annuitant's death. Joint life. This option provides income to two annuitants, usually spouses, for their lifetimes. Payments continue until the death of the last surviving annuitant, ensuring income for both lives. Period certain. Under this option, the annuity guarantees payments for a specified period, such as 10 or 20 years, regardless of the annuitant's survival. If the annuitant dies before the end of the period, payments continue to a designated beneficiary for the remainder of the period. Life with period certain. This option combines life income with a period certain guarantee. If the annuitant dies before the end of the specified period, payments continue to a beneficiary for the remainder of the period. Policyholders should carefully consider their financial goals, risk tolerance, and income needs when selecting an annuity payout option. Question 20. What are the tax implications of annuity withdrawals and distributions in Delaware? A. Withdrawals are tax-free until the annuitant reaches age 59 and a half. B. Withdrawals are subject to ordinary income tax and may be subject to a 10% penalty if taken before age 59 and a half. C. Withdrawals are tax-free if used for qualified medical expenses. D. Withdrawals are taxed at a reduced capital gains rate. Correct answer. B. Withdrawals are subject to ordinary income tax and may be subject to a 10% penalty if taken before age 59 and a half. Explanation. In Delaware and across the United States, withdrawals and distributions from annuities are generally taxed as ordinary income, regardless of the annuitant's age. This means that the earnings portion of withdrawals is subject to federal and state income tax at the annuitant's marginal tax rate. Additionally, if withdrawals are taken before age 59 and a half, they may be subject to a 10% early withdrawal penalty imposed by the IRS, unless an exception applies. While some exceptions exist for penalty-free withdrawals, such as for qualified medical expenses or under certain hardship provisions, annuitants should consult with a tax advisor to determine the tax treatment of their specific withdrawals. Annuity distributions taken as annuitized payments may have different tax treatment, with a portion of each payment considered a tax-free return of principal and the remainder taxed as ordinary income. Question 21. What are annuity surrender periods and surrender charges in Delaware? A. Surrender periods are the periods during which annuity premiums are invested. B. Surrender charges are fees imposed if the annuity is surrendered before the end of the surrender period. C. Surrender periods determine the length of time annuity payments will be made. D. Surrender charges are waived if the annuitant dies during the surrender period. Correct answer. B. Surrender charges are fees imposed if the annuity is surrendered before the end of the surrender period. Explanation. In Delaware, annuity contracts often include a surrender period, which is a specified period of time during which the annuitant is subject to surrender charges if they choose to withdraw or surrender the annuity. Surrender charges are fees imposed by the insurance company to recoup expenses associated with issuing the annuity, such as sales commissions and administrative costs. These charges are typically highest in the early years of the contract and gradually decrease over time until they eventually expire at the end of the surrender period. Policyholders should be aware of the surrender period and associated surrender charges before purchasing an annuity, as early withdrawals may result in significant penalties and a reduction in the amount of funds available for withdrawal. Surrender charges are separate from any taxes or penalties that may apply to withdrawals, so it's essential for annuitants to understand the full financial implications of surrendering their annuity before making a decision. Question 22. In Delaware, what are the beneficiary options available for annuity death benefits? A. Lump sum payment and installment payments. B. Primary and contingent beneficiaries. C. Spousal continuation and non-spousal continuation. D. Term certain and life income options. Correct answer. B. Primary and contingent beneficiaries. Explanation. In Delaware, annuity contracts allow policyholders to designate primary and contingent beneficiaries to receive death benefits upon the annuitant's death. Primary beneficiary. The primary beneficiary is the first in line to receive the death benefit proceeds upon the annuitant's death. If the primary beneficiary predeceases the annuitant or disclaims the benefit, the proceeds would then pass to the contingent beneficiary. Contingent beneficiary. The contingent beneficiary is the second in line to receive the death benefit proceeds if the primary beneficiary is unable to receive them. Contingent beneficiaries only receive the proceeds if the primary beneficiary is deceased or unable to accept the benefit. Policyholders have the flexibility to allocate percentages of the death benefit among multiple primary and contingent beneficiaries, as well as specify the order in which they receive the benefits. It's important for annuity owners to review and update beneficiary designations regularly to ensure their wishes are accurately reflected. Question 23. What are the insurance licensing and continuing education requirements for agents in Delaware? A. Agents must pass a background check, but there are no education requirements. B. Agents must complete pre-licensing education and pass a licensing exam, followed by ongoing continuing education requirements. C. Agents must hold a bachelor's degree in insurance or a related field. D. Agents must complete an apprenticeship program under a licensed agent. Correct answer. B. Agents must complete pre-licensing education and pass a licensing exam, followed by ongoing continuing education requirements. Explanation. In Delaware, insurance agents are required to meet specific licensing and education requirements to legally sell insurance products. Pre-licensing education. Prospective agents must complete a state-approved pre-licensing education course covering fundamental insurance principles, product knowledge, ethics, and state insurance laws and regulations. Licensing exam. After completing the pre-licensing education, agents must pass a state licensing exam administered by the Delaware Department of Insurance. The exam assesses the agent's understanding of insurance concepts and state-specific regulations. Continuing education. Once licensed, agents are required to complete ongoing continuing education (CE) courses to maintain their license. Delaware mandates a certain number of CE credits to be completed within a specified renewal period, covering relevant topics to keep agents informed of industry developments and regulatory changes. Failure to comply with licensing and CE requirements can result in license suspension or revocation, as well as fines or other penalties. Question 24. What is the role of the Delaware Department of Insurance in regulating the insurance industry? A. Providing insurance coverage to state residents. B. Conducting market research and analysis. C. Licensing insurance companies and agents and enforcing insurance laws and regulations. D. Administering federal insurance programs. Correct answer. C. Licensing insurance companies and agents and enforcing insurance laws and regulations. Explanation. The Delaware Department of Insurance plays a crucial role in regulating the insurance industry within the state. Licensing. The department is responsible for licensing insurance companies and agents operating in Delaware, ensuring they meet the necessary requirements to conduct business in the state. This includes verifying the financial stability and solvency of insurance companies and the competency and integrity of insurance agents. Enforcement. The department enforces insurance laws and regulations to protect consumers and maintain the integrity of the insurance market. This includes investigating consumer complaints, conducting market conduct examinations, and taking disciplinary action against entities or individuals found to be in violation of state insurance laws. Consumer protection. The department provides consumer assistance and education to help residents make informed insurance decisions, understand their rights and options, and resolve disputes with insurance companies or agents. By licensing insurance entities, enforcing regulations, and educating consumers, the Delaware Department of Insurance aims to foster a fair, competitive, and stable insurance market that serves the best interests of Delaware residents. Question 25. What role do federal and state regulations play in the regulation of insurance rates and forms in Delaware? A. Federal regulations primarily govern insurance rates, while state regulations oversee insurance forms. B. Federal and state regulations both govern insurance rates and forms independently. C. State regulations primarily govern insurance rates, while federal regulations oversee insurance forms. D. Insurance rates and forms are solely regulated by insurance companies. Correct answer. B. Federal and state regulations both govern insurance rates and forms independently. Explanation. In Delaware, both federal and state regulations play crucial roles in regulating insurance rates and forms. Federal regulations. The McCarran-Ferguson Act grants states the authority to regulate the business of insurance, including insurance rates and forms. However, certain federal laws, such as the Affordable Care Act, ACA, and the Employee Retirement Income Security Act, ERISA, may impact insurance rates and forms, especially in areas of health insurance and employee benefits. State regulations. The Delaware Department of Insurance oversees insurance regulations within the state, including the approval of insurance rates and forms. Insurers must submit rate filings and form submissions to the department for review and approval. State regulations aim to ensure that insurance rates are fair, adequate, and not discriminatory, while insurance forms are clear, understandable, and compliant with state laws. By enforcing regulations on insurance rates and forms, both federally and at the state level, regulators seek to protect consumers, promote market stability, and maintain the integrity of the insurance industry. Question 26. What measures are implemented to prevent and detect insurance fraud in Delaware? A. Random audits of insurance companies. B. Enhanced background checks for insurance agents. C. Collaboration between insurance regulators, law enforcement, and industry stakeholders. D. Self-regulation by insurance companies. Correct answer. C. Collaboration between insurance regulators, law enforcement, and industry stakeholders. Explanation. In Delaware, preventing and detecting insurance fraud requires collaboration among various entities, including insurance regulators, law enforcement agencies, and industry stakeholders. Insurance regulators. The Delaware Department of Insurance works to prevent fraud by monitoring insurance transactions, conducting investigations, and implementing regulatory measures to identify and address fraudulent activities. Law enforcement. Local law enforcement agencies collaborate with insurance regulators to investigate suspected instances of insurance fraud, prosecute offenders, and deter fraudulent activities through enforcement actions. Industry stakeholders. Insurance companies, agents, and other industry participants play a vital role in fraud prevention by implementing internal controls, conducting training programs on fraud awareness, and reporting suspicious activities to regulators and law enforcement agencies. By fostering cooperation and information sharing among these stakeholders, Delaware aims to combat insurance fraud effectively, protect consumers from financial harm, and maintain trust and integrity in the insurance marketplace. Question 27. How should insurance agents address conflicts of interest in insurance sales and recommendations in Delaware? A. Disclose conflicts of interest to clients and prioritize client interests over personal gain. B. Conceal conflicts of interest to maintain client trust. C. Base recommendations solely on the commission offered by insurance companies. D. Refer clients to other agents when conflicts of interest arise. Correct answer: A. Disclose conflicts of interest to clients and prioritize client interests over personal gain. Explanation: in Delaware, insurance agents are required to adhere to ethical standards and act in the best interests of their clients, even when conflicts of interest may arise. Disclosure: when faced with conflicts of interest, agents should disclose any potential conflicts to their clients transparently. This includes disclosing relationships with insurance companies, compensation arrangements, or any factors that may influence their recommendations. Client interests: agents must prioritize the interests of their clients above their own financial interests or incentives. This means recommending insurance products and coverage options that best suit the client's needs, goals, and financial situation, rather than solely focusing on maximizing commissions or personal gain. By disclosing conflicts of interest and prioritizing client interests, insurance agents uphold their professional integrity, build trust with clients, and fulfill their ethical duty to provide fair and objective advice in insurance sales and recommendations. Question 28. In Delaware, what are some ethical considerations in underwriting and claims handling for insurance professionals? A. Providing preferential treatment to certain policyholders. B. Deliberately delaying claims processing to avoid payouts. C. Ensuring fairness and impartiality in underwriting decisions and claims settlements. D. Ignoring policy exclusions to maximize payouts for policyholders. Correct answer: C. Ensuring fairness and impartiality in underwriting decisions and claims settlements. Explanation: ethical conduct is paramount in underwriting and claims handling processes to maintain the integrity of the insurance industry in Delaware. Fairness and impartiality: insurance professionals must make underwriting decisions and handle claims impartially, without favoritism or discrimination. This includes evaluating risks objectively during underwriting and adjudicating claims based on the terms and conditions of the insurance policies. Honesty and transparency: underwriters and claims adjusters should provide clear and transparent communication to policyholders regarding underwriting criteria, coverage limitations, and claims procedures. Honest disclosure of information helps build trust and ensures policyholders have realistic expectations. Compliance with regulations: insurance professionals must adhere to state laws and regulations governing underwriting practices and claims handling procedures. Violating regulations, such as engaging in unfair claims practices or discriminating against certain policyholders, can result in regulatory penalties and damage to the insurer's reputation. By upholding ethical standards in underwriting and claims handling, insurance professionals contribute to maintaining consumer trust, promoting market stability, and fulfilling their fiduciary duty to policyholders. Question 29. What are the professional codes of conduct that insurance agents and brokers in Delaware are expected to follow? A. Maximizing commissions by selling unnecessary coverage to clients. B. Disclosing conflicts of interest and prioritizing client interests. C. Concealing information about policy terms and conditions from clients. D. Advising clients to misrepresent information on insurance applications. Correct answer: B. Disclosing conflicts of interest and prioritizing client interests. Explanation: insurance agents and brokers in Delaware are bound by professional codes of conduct that emphasize integrity, honesty, and client-centric service. Disclosure of conflicts of interest: agents and brokers must disclose any potential conflicts of interest to their clients, such as receiving commissions or incentives from insurance companies for selling specific policies. Full disclosure allows clients to make informed decisions and ensures transparency in the agent-client relationship. Prioritizing client interests: insurance professionals are obligated to act in the best interests of their clients, recommending insurance products and coverage options that align with the client's needs, objectives, and financial circumstances. This includes providing accurate information, unbiased advice, and suitable recommendations tailored to individual client situations. Compliance with laws and regulations. Agents and brokers must comply with state and federal laws governing insurance sales and distribution, including licensing requirements, advertising regulations, and consumer protection statutes. Violating these regulations can lead to disciplinary actions, fines, or license revocation. By adhering to professional codes of conduct, insurance agents and brokers uphold their ethical responsibilities, foster trust with clients, and maintain the reputation and integrity of the insurance industry. Question 30. What are some ethical issues that insurance professionals need to consider in marketing and advertising practices in Delaware? A. Making false or misleading statements about policy benefits. B. Using deceptive sales tactics to pressure clients into purchasing insurance. C. Providing accurate and transparent information to clients in marketing materials. D. Failing to disclose policy exclusions and limitations to potential policyholders. Correct answer: A. Making false or misleading statements about policy benefits. Explanation: ethical marketing and advertising practices are essential for insurance professionals in Delaware to ensure transparency, fairness, and consumer protection. Truthfulness and accuracy. Insurance professionals must avoid making false or misleading statements about policy benefits, coverage terms, or pricing in marketing materials or advertisements. Providing accurate information helps consumers make informed decisions and prevents deceptive practices. Transparency and disclosure. Marketing materials should disclose relevant information about insurance products, including exclusions, limitations, deductibles, and premium costs. Concealing or downplaying important details can mislead consumers and undermine trust in the insurance industry. Compliance with regulations. Advertising practices must comply with state and federal laws governing insurance marketing, including truth in advertising laws, unfair trade practices regulations, and requirements for clear and conspicuous disclosures. Violating these regulations can lead to regulatory sanctions, fines, or legal consequences. By adhering to ethical standards in marketing and advertising, insurance professionals uphold their duty to act in the best interests of consumers, maintain industry integrity, and promote trust and confidence in insurance products and services. Question 31. What does an overview of health insurance entail in Delaware? A. Examining the intricacies of specific health insurance plans. B. Understanding the history and evolution of health insurance in the United States. C. Reviewing the fundamental principles and concepts of health insurance. D. Analyzing the financial performance of health insurance companies. Correct answer: C. Reviewing the fundamental principles and concepts of health insurance. Explanation: an overview of health insurance involves understanding the fundamental principles and concepts that govern health insurance coverage. Principles: health insurance operates based on principles such as risk pooling, whereby premiums from policyholders are pooled to cover the healthcare expenses of those who require medical care. Additionally, principles like shared responsibility and cost sharing play a role in determining policy terms and coverage options. Concepts: health insurance concepts include understanding policy structures, coverage limits, deductibles, copayments, coinsurance, and out-of-pocket expenses. Familiarity with these concepts helps individuals make informed decisions when selecting health insurance plans and utilizing their coverage. Regulations: health insurance overview also encompasses knowledge of federal and state regulations that govern the health insurance industry, including laws related to coverage mandates, consumer protections, and insurance market reforms. By comprehensively understanding the principles and concepts of health insurance, individuals can navigate the complexities of the healthcare system and make informed decisions regarding their coverage options. Question 32. What distinguishes the types of health insurance plans available in Delaware? A. Premium costs and coverage limits. B. Geographical availability of healthcare providers. C. Age and gender demographics of policyholders. D. Market competition among insurance carriers. Correct answer: A. Premium costs and coverage limits. Explanation: different types of health insurance plans in Delaware vary in terms of premium costs and coverage limits, catering to diverse healthcare needs and budget considerations. Individual plans. Individual health insurance plans are purchased by individuals or families directly from insurance companies. Premium costs are based on factors such as age, health status, and coverage preferences. Policyholders have control over plan selection and coverage levels. Group plans. Group health insurance plans are offered by employers to their employees and often include coverage for dependents. Premium costs are typically shared between employers and employees, with rates based on group demographics and claims experience. Group plans may offer comprehensive coverage and lower premiums compared to individual plans. Government-sponsored plans. Government-sponsored health insurance programs, such as Medicaid and Medicare, provide coverage to eligible individuals based on specific criteria, such as income, age, or disability status. Premium costs and coverage limits vary depending on the program and eligibility requirements. Understanding the distinctions between these types of health insurance plans helps individuals and employers make informed decisions when selecting coverage options that align with their healthcare needs and financial resources. Question 33. What are some examples of coverage options available in health insurance plans in Delaware? A. Home health care and alternative medicine services. B. Coverage for preventive care and wellness programs. C. Discounts on gym memberships and fitness classes. D. Reimbursement for over-the-counter medication purchases. Correct answer: B. Coverage for preventive care and wellness programs. Explanation: health insurance plans in Delaware offer various coverage options, including preventive care and wellness programs aimed at promoting overall health and wellness among policyholders. Preventive care. Health insurance plans often provide coverage for preventive services, such as annual wellness exams, immunizations, screenings for chronic conditions, e.g., diabetes, hypertension, and preventive screenings, e.g., mammograms, colonoscopies. These services are intended to detect health issues early and prevent the onset of more serious medical conditions. Wellness programs. Some health insurance plans offer wellness programs and incentives to encourage healthy behaviors and lifestyle choices. These programs may include access to fitness classes, nutritional counseling, smoking cessation support, and stress management resources. Policyholders may receive incentives such as premium discounts or rewards for participating in wellness activities. By offering coverage for preventive care and wellness programs, health insurance plans in Delaware aim to support policyholders in maintaining optimal health and reducing the risk of illness and disease. Question 34. What does an explanation of health insurance policy provisions and benefits typically involve? A. Reviewing the financial stability of the insurance company. B. Understanding the process of filing a claim with the insurance company. C. Explaining the specific terms and conditions of the insurance policy. D. Analyzing the healthcare needs of the insured individual. Correct answer: C. Explaining the specific terms and conditions of the insurance policy. Explanation: when providing an explanation of health insurance policy provisions and benefits, it entails detailing the specific terms and conditions outlined in the insurance policy. Here's a breakdown of what this involves. Policy coverage. This includes elucidating what medical services and treatments are covered by the policy. It delineates the scope of coverage, such as hospitalization, outpatient services, prescription drugs, preventive care, and specialist consultations. Policy exclusions. This highlights what the policy does not cover, such as cosmetic procedures, experimental treatments, and certain pre-existing conditions. It's crucial for policyholders to understand these exclusions to avoid unexpected expenses. Benefit limits. Explanation of any limits on benefits, such as annual or lifetime maximums, and how they may affect coverage for certain medical expenses. Policy provisions. This encompasses various provisions within the policy, including deductibles, copayments, coinsurance, and coverage limits. Understanding these provisions helps policyholders grasp their financial responsibilities and how cost-sharing works. By providing a comprehensive explanation of these policy provisions and benefits, insurance agents can assist clients in making informed decisions regarding their healthcare coverage. Question 35. Which of the following represents a common policy clause found in health insurance policies? A. Annual out-of-pocket maximum. B. Monthly premium payment schedule. C. Quarterly health savings account contributions. D. Biennial insurance coverage review. Correct answer: A. Annual out-of-pocket maximum. Explanation. A common policy clause found in health insurance policies is the annual out-of-pocket maximum. Here's an explanation of this clause. Annual out-of-pocket maximum. This clause specifies the maximum amount a policyholder is required to pay out of pocket for covered healthcare expenses within a given policy year. Once the out-of-pocket maximum is reached, the insurance company typically covers 100% of covered expenses for the remainder of the policy year. It includes expenses such as deductibles, copayments, and coinsurance. Understanding the annual out-of-pocket maximum is essential for policyholders to gauge their potential financial liability for healthcare costs and plan accordingly. It provides a safeguard against excessive medical expenses by capping the amount the insured individual must pay in a given year. Question 36. What do coverage limits and exclusions refer to in health insurance policies? A. The duration of time the policy remains in force. B. The geographical area covered by the insurance policy. C. Restrictions on the types or extent of medical services covered. D. The number of dependents eligible for coverage under the policy. Correct answer: C. Restrictions on the types or extent of medical services covered. Explanation. Coverage limits and exclusions in health insurance policies pertain to restrictions on the types or extent of medical services covered. Here's a detailed explanation. Coverage limits. These are restrictions on the maximum amount of benefits the insurance company will pay for certain services or treatments. For example, a policy might have a limit on the number of physical therapy sessions covered per year or a maximum dollar amount for certain procedures. Exclusions. Exclusions specify medical services or treatments that are not covered by the policy. This may include elective cosmetic procedures, infertility treatments, experimental therapies, and certain pre-existing conditions. Policyholders need to be aware of these exclusions to avoid unexpected expenses. Understanding coverage limits and exclusions helps policyholders manage their healthcare expenses effectively and make informed decisions about their medical care. It's essential for agents to clearly communicate these aspects of the policy to clients to prevent misunderstandings and ensure adequate coverage. Question 37. What is a fundamental aspect of the underwriting process for health insurance? A. Analyzing mortality rates. B. Reviewing policy exclusions. C. Assessing an applicant's health status. D. Evaluating investment returns. Correct answer: C. Assessing an applicant's health status. Explanation. The underwriting process for health insurance involves assessing an applicant's health status to determine their insurability and the appropriate premium rates. Here's a breakdown of this aspect. Health status assessment. Insurance companies evaluate an applicant's health history, current medical conditions, lifestyle factors, and other pertinent information to assess the level of risk they pose. This assessment helps insurers determine the likelihood of the applicant needing medical care and the potential costs associated with that care. Medical underwriting. Medical underwriting involves reviewing medical records, conducting medical exams if necessary, and assessing the applicant's overall health status. Insurers use this information to determine whether to approve the application, impose exclusions, or adjust premium rates based on the perceived level of risk. Risk mitigation. Through underwriting, Insurers aim to mitigate risk by ensuring that premiums are commensurate with the applicant's health status. This helps maintain the financial stability of the insurance pool and ensures that policyholders receive the appropriate level of coverage. By assessing an applicant's health status as part of the underwriting process, insurers can make informed decisions about issuing policies and setting premiums, ultimately contributing to the sustainability of the health insurance market. Question 38. Which of the following factors may affect an individual's insurability for health insurance? A. Marital status. B. Credit score. C. Occupation. D. Vehicle ownership. Correct answer. C. Occupation. Explanation. Occupation is one of the factors that may affect an individual's insurability for health insurance. Here's how occupation influences insurability. Occupational hazards. Certain occupations involve higher risks of injury or illness due to the nature of the work. Jobs in industries such as construction, mining, or firefighting may pose greater risks to workers' health compared to office-based professions. Insurers take into account the occupational hazards associated with an individual's job when assessing their insurability. Health risks. Some occupations may be associated with specific health risks or exposures, such as exposure to hazardous materials, physical strain, or repetitive motions. These factors can impact an individual's health status and may affect their eligibility for certain health insurance plans or influence premium rates. Underwriting criteria. Insurers consider an applicant's occupation as part of the underwriting process to evaluate the level of risk they present. Certain occupations may result in higher premiums or exclusions for certain types of coverage based on the perceived risk associated with the job. Understanding how occupation influences insurability helps insurance professionals accurately assess risk and tailor coverage options to meet the needs of individuals across various occupational sectors. Question 39. What does risk selection and classification involve in the underwriting and risk assessment process for health insurance? A. Assigning policy limits. B. Determining premium rates. C. Reviewing claim histories. D. Assessing applicants' credit scores. Correct answer. B. Determining premium rates. Explanation. Risk selection and classification in the underwriting and risk assessment process for health insurance primarily involve determining premium rates based on the perceived level of risk associated with an applicant. Here's how this process works. Risk assessment. Insurers evaluate various factors, including an applicant's health status, medical history, lifestyle habits, and demographic information, to assess the level of risk they present. This assessment helps categorize applicants into different risk classes based on their likelihood of incurring healthcare expenses. Premium determination. Once applicants are categorized into risk classes, insurers use this information to set premium rates for health insurance policies. Individuals deemed to be at lower risk may qualify for lower premiums, while those at higher risk may face higher premium rates to account for the increased likelihood of medical claims. Fair pricing. Risk selection and classification aim to ensure that premiums are priced fairly based on the level of risk associated with each applicant. Insurers strive to balance the need to cover healthcare costs while making coverage accessible and affordable for individuals across diverse risk profiles. By accurately assessing risk and classifying applicants accordingly, insurers can establish premium rates that reflect the underlying risk factors and maintain the financial stability of the health insurance market. Question 40. What is a key aspect of the Affordable Care Act, ACA, provisions regarding health insurance? A. Mandating coverage for cosmetic procedures. B. Establishing health insurance marketplaces. C. Excluding coverage for pre-existing conditions. D. Allowing lifetime limits on essential health benefits. Correct answer. B. Establishing health insurance marketplaces. Explanation. The Affordable Care Act, ACA, also known as Obamacare, introduced several provisions to reform the health insurance landscape in the United States. One key aspect of the ACA is the establishment of health insurance marketplaces, also known as exchanges. Here's an explanation. Health insurance marketplaces. The ACA created state-based and federally facilitated health insurance marketplaces where individuals and small businesses can shop for and purchase health insurance plans. These marketplaces offer a range of qualified health plans that comply with ACA requirements. Access to coverage. Health insurance marketplaces provide a centralized platform for consumers to compare health insurance options based on cost, coverage, and other factors. They also facilitate enrollment in Medicaid and the Children's Health Insurance Program, CHIP, for eligible individuals. Subsidies and tax credits. The ACA offers premium subsidies and tax credits to eligible individuals and families purchasing coverage through the health insurance marketplaces, making health insurance more affordable for many Americans. By establishing health insurance marketplaces, the ACA aims to increase access to affordable health insurance coverage, promote competition among insurers, and improve transparency in the insurance market. Question 41. Which of the following is a key provision of HIPAA regulations and privacy rules related to health insurance? A. Requiring insurers to cover all medical procedures. B. Mandating the use of electronic health records. C. Protecting individuals' health information confidentiality. D. Allowing insurers to discriminate based on genetic information. Correct answer. C. Protecting individuals' health information confidentiality. Explanation. The Health Insurance Portability and Accountability Act, HIPAA, includes regulations and privacy rules designed to safeguard individuals' health information. A key provision of HIPAA is the protection of individuals' health information confidentiality. Here's an overview. Privacy Rule. HIPAA's privacy rule establishes national standards for the protection of individuals' health information held by covered entities, including health plans, healthcare providers, and healthcare clearinghouses. The privacy rule governs the use and disclosure of protected health information, (PHI), and grants individuals certain rights regarding their health information. Confidentiality safeguards. HIPAA requires covered entities to implement administrative, physical, and technical safeguards to ensure the confidentiality, integrity, and availability of PHI. These safeguards help prevent unauthorized access, use, or disclosure of individuals' health information. Individual rights. HIPAA grants individuals rights over their health information, including the right to access their medical records, request amendments to their records, and obtain an accounting of disclosures. Covered entities must comply with individuals' requests and provide them with adequate privacy protections. Protecting individuals' health information confidentiality is essential for maintaining trust in the healthcare system and ensuring that sensitive medical information remains secure and private. Question 42. How do state and federal regulations govern health insurance in the United States? A. State regulations supersede federal regulations. B. Federal regulations exclusively govern health insurance. C. Both state and federal regulations play a role in regulating health insurance. D. Health insurance is regulated at both state and federal levels. Correct answer. C. Both state and federal regulations play a role in regulating health insurance. Explanation. Health insurance in the United States is subject to regulation by both state and federal authorities. Here's how state and federal regulations govern health insurance. State regulations. States have primary regulatory authority over health insurance within their jurisdictions. State insurance departments oversee the licensing of insurers, review and approve insurance policy forms and rates, and enforce consumer protection laws. States also regulate insurance market conduct and solvency to ensure the financial stability of insurers operating within their borders. Federal regulations. While states primarily regulate health insurance, federal laws and regulations also play a significant role in shaping the health insurance landscape. For example, the Affordable Care Act, ACA, introduced federal requirements regarding coverage mandates, essential health benefits, and health insurance marketplaces. Additionally, laws such as HIPAA and the Mental Health Parity and Addiction Equity Act, MHPAEA, impose federal standards related to privacy protections, mental health coverage, and other aspects of health insurance. Coordination and compliance. State and federal regulations often complement each other, with federal laws setting minimum standards that states may choose to exceed. Insurers operating across multiple states must navigate both state and federal regulatory frameworks to ensure compliance with applicable laws and regulations. The interaction between state and federal regulations helps maintain a balance between state autonomy in insurance regulation and federal oversight to promote consistency and protect consumers' interests across the nation. Question 43. What is a fundamental aspect of understanding health insurance exchanges? A. They are exclusively operated by insurance companies. B. They offer only one type of health insurance plan. C. They provide a platform for comparing and purchasing health insurance plans. D. They are accessible only to individuals with employer-sponsored coverage. Correct answer. C. They provide a platform for comparing and purchasing health insurance plans. Explanation. Health insurance exchanges, also known as health insurance marketplaces, play a vital role in facilitating access to health insurance coverage for individuals and families. Here's an explanation of why option C is correct. Platform for comparing plans. Health insurance exchanges serve as online marketplaces where individuals and small businesses can compare and purchase health insurance plans. They offer a range of qualified health plans from different insurers, allowing consumers to evaluate various options based on cost, coverage, and other factors. Consumer choice. By providing a centralized platform for shopping for health insurance, exchanges empower consumers to make informed decisions about their coverage options. Individuals can explore different plans, review details such as premiums, deductibles, and networks, and select the option that best meets their needs. Standardized information. Health insurance exchanges present plan information in a standardized format, making it easier for consumers to compare key features and benefits across different plans. This transparency helps individuals understand their coverage options and choose the plan that aligns with their preferences and budget. Overall, health insurance exchanges play a crucial role in promoting transparency, consumer choice, and access to affordable health insurance coverage. Question 44. What are enrollment periods and special enrollment options in the context of health insurance marketplaces? A. Enrollment periods are mandatory waiting periods for new applicants, while special enrollment options are only available to certain demographics. B. Enrollment periods are specific times when individuals can enroll in or change their health insurance coverage, while special enrollment options allow individuals to enroll outside of the standard enrollment periods under certain circumstances. C. Enrollment periods refer to the time frame during which insurance companies accept applications, while special enrollment options are discounts offered to eligible individuals. D. Enrollment periods are determined by the federal government, while special enrollment options are set by state authorities. Correct answer. B. Enrollment periods are specific times when individuals can enroll in or change their health insurance coverage, while special enrollment options allow individuals to enroll outside of the standard enrollment periods under certain circumstances. Explanation. Enrollment periods and special enrollment options are essential concepts related to accessing coverage through health insurance marketplaces. Here's why option B is correct. Enrollment periods. Enrollment periods, also known as open enrollment periods, are specific times during the year when individuals can enroll in or make changes to their health insurance coverage. These periods are typically set by the federal government or state authorities and provide opportunities for individuals to sign up for coverage or switch plans. Special enrollment options. Special enrollment options, on the other hand, allow individuals to enroll in health insurance outside of the standard enrollment periods under qualifying life events or circumstances. Examples of qualifying events may include marriage, birth or adoption of a child, loss of other coverage, or relocation. Special enrollment options ensure that individuals experiencing life changes have opportunities to access health insurance coverage when needed. Together, enrollment periods and special enrollment options help ensure that individuals have opportunities to obtain health insurance coverage and make changes to their plans as circumstances change throughout the year. Question 45. What is the purpose of subsidies and premium tax credits in the context of health insurance marketplaces? A. To increase insurance company profits. B. To penalize individuals without health insurance coverage. C. To provide financial assistance to eligible individuals and families to help reduce the cost of health insurance premiums. D. To fund administrative costs associated with operating health insurance exchanges. Correct answer. C. To provide financial assistance to eligible individuals and families to help reduce the cost of health insurance premiums. Explanation. Subsidies and premium tax credits are mechanisms designed to make health insurance coverage more affordable for eligible individuals and families purchasing plans through health insurance marketplaces. Here's why option C is correct. Financial assistance. Subsidies and premium tax credits are provided by the government to eligible individuals and families to help offset the cost of health insurance premiums. These financial assistance programs aim to make health insurance coverage more affordable, particularly for low and moderate income individuals who may struggle to afford premiums without assistance. Income-based eligibility. Eligibility for subsidies and premium tax credits is typically based on household income and family size. Individuals and families with incomes within certain thresholds may qualify for financial assistance to reduce their premium costs. The amount of assistance provided is often determined by income level and the cost of benchmark health insurance plans in the marketplace. Promoting access to coverage. By reducing the financial burden of health insurance premiums, subsidies and premium tax credits help promote access to coverage and encourage enrollment in health insurance plans through the marketplace. These programs aim to increase insurance affordability and reduce the number of uninsured individuals in the United States. Overall, subsidies and premium tax credits play a crucial role in making health insurance coverage more accessible and affordable for eligible individuals and families, contributing to broader efforts to improve healthcare access and affordability. Question 46. What is a fundamental characteristic of managed care organizations, MCOs? A. They prioritize fee-for-service payment models. B. They do not involve any form of network structure. C. They focus on controlling healthcare costs and improving quality of care. D. They primarily serve as insurance brokers rather than healthcare providers. Correct answer. C. They focus on controlling healthcare costs and improving quality of care. Explanation. Managed care organizations, MCOs, are entities that play a significant role in the delivery and management of healthcare services. Here's why option C is correct. Cost control. One of the primary goals of MCOs is to control healthcare costs. They achieve this by implementing various cost containment measures, such as negotiating discounted rates with healthcare providers, promoting preventive care to reduce the need for expensive treatments, and implementing utilization management techniques. Quality improvement. In addition to cost control, MCOs also focus on improving the quality of care delivered to patients. They may establish quality assurance programs, conduct performance evaluations of healthcare providers, and implement guidelines and protocols aimed at ensuring that patients receive appropriate and effective treatments. Population health management. MCOs often engage in population health management strategies to address the health needs of their enrolled members proactively. This may include wellness initiatives, chronic disease management programs, and health education efforts aimed at promoting healthy behaviors and reducing the incidence of preventable illnesses. Overall, MCOs are characterized by their dual focus on cost control and quality improvement, with the overarching goal of delivering efficient, effective, and high-quality healthcare services to their members. Question 47. What role do network structures and provider contracting play in managed care organizations, MCOs? A. They have no impact on the delivery of healthcare services. B. They facilitate access to a broad range of healthcare providers and services. C. They limit patient choice to a specific network of contracted providers. D. They primarily serve administrative purposes and do not affect patient care. Correct answer. C. They limit patient choice to a specific network of contracted providers. Explanation. Network structures and provider contracting are essential components of managed care organizations, MCOs, that influence how healthcare services are delivered and accessed. Here's why option C is correct. Network structures. MCOs typically establish networks of healthcare providers, including physicians, hospitals, clinics, and other healthcare facilities. These networks consist of providers who have contracted with the MCO to deliver services to its members. Provider contracting. MCOs negotiate contracts with healthcare providers to define the terms of their participation in the network, including reimbursement rates, quality standards, and service delivery requirements. Providers who agree to contract with the MCO become part of the network and agree to abide by the terms of the contract. Patient choice. Patients enrolled in MCO plans typically have access to a network of contracted providers. While some MCOs offer options for out-of-network care, accessing providers outside of the network may result in higher out-of-pocket costs for patients. Therefore, network structures and provider contracting often limit patient choice to the providers within the network. By establishing networks and contracting with providers, MCOs aim to streamline the delivery of care, manage costs, and ensure that patients receive care from qualified providers who meet the MCO's standards. Question 48. What is the purpose of utilization review and managed care techniques in managed care organizations, MCOs? A. To maximize healthcare costs without compromising quality of care. B. To ensure that patients receive unnecessary medical treatments. C. To evaluate the appropriateness and necessity of healthcare services. D. To encourage overutilization of healthcare services to generate revenue. Correct answer. C. To evaluate the appropriateness and necessity of healthcare services. Explanation. Utilization review and managed care techniques are integral components of managed care organizations, MCOs, aimed at ensuring efficient and appropriate use of healthcare services. Here's why option C is correct. Utilization review. Utilization review involves the systematic evaluation of the medical necessity, appropriateness, and efficiency of healthcare services provided to patients. MCOs conduct utilization review processes to assess whether treatments, procedures, and services meet established clinical criteria and guidelines. Managed care techniques. MCOs employ various managed care techniques to manage and optimize the use of healthcare resources. These techniques may include prior authorization requirements, case management programs, disease management initiatives, and evidence-based medicine protocols. By implementing these strategies, MCOs seek to promote cost-effective care delivery while maintaining quality and outcomes. Cost containment. Utilization review and managed care techniques play a crucial role in containing healthcare costs by minimizing unnecessary or excessive utilization of services. By identifying and addressing inappropriate care, MCOs can prevent unnecessary expenditures and ensure that resources are allocated efficiently. Overall, utilization review and managed care techniques support the overarching goals of MCOs to control costs, improve quality, and optimize the delivery of healthcare services to their members. Question 49. What is a crucial step in the health insurance claims process? A. Denying all claims to minimize expenses. B. Delaying claims processing to frustrate policyholders. C. Processing claims promptly and fairly. D. Requiring excessive documentation for claims approval. Correct answer. C. Processing claims promptly and fairly. Explanation. Processing claims promptly and fairly is a fundamental aspect of the health insurance claims process. Here's why option C is correct. Prompt processing. Insurance companies are obligated to process claims promptly to ensure that policyholders receive timely reimbursement for covered medical expenses. Delays in claims processing can cause financial hardship for policyholders and undermine the purpose of insurance coverage. Fair adjudication. Claims should be adjudicated fairly based on the terms and conditions outlined in the insurance policy. Insurance companies must assess claims objectively, following established guidelines and procedures, to determine coverage eligibility and the appropriate reimbursement amount. Compliance with regulations. Health insurance companies are subject to regulatory requirements regarding claims processing. State insurance departments and laws, such as the Delaware Insurance Code, mandate fair and efficient claims handling practices to protect consumers' rights and interests. By processing claims promptly and fairly, insurance companies fulfill their contractual obligations to policyholders and maintain compliance with regulatory standards, thereby promoting trust and confidence in the insurance industry. Question 50. What is the purpose of an explanation of benefits, EOB, in the health insurance claims process? A. To confuse policyholders with complex language and terminology. B. To provide a summary of covered and non-covered healthcare services. C. To delay claims processing and reimbursement. D. To exclude policyholders from the claims process entirely. Correct answer. B. To provide a summary of covered and non-covered healthcare services. Explanation. An explanation of benefits, EOB, serves as a vital document in the health insurance claims process, providing policyholders with essential information about their claims. Here's why option B is correct. Summary of services. The EOB typically outlines the details of healthcare services rendered, including the date of service, the name of the provider, the type of service or treatment, and the billed amount. It distinguishes between covered services, for which the insurance company will provide reimbursement, and non-covered services, which may require out-of-pocket payment by the policyholder. Claim adjudication details. Additionally, the EOB often includes information about how the claim was adjudicated, such as the amount paid by the insurance company, any deductible or coinsurance amounts owed by the policyholder, and any reasons for denial or partial payment. Transparency and accountability. By providing policyholders with a transparent summary of their claims, EOBs promote accountability and help policyholders understand how their insurance coverage applies to specific healthcare services. This transparency facilitates informed decision-making and helps prevent misunderstandings or disputes regarding coverage and reimbursement. Overall, EOBs play a critical role in enhancing transparency, informing policyholders about their claims, and promoting clarity in the health insurance claims process. Question 51. How do health insurance companies work to prevent and detect fraud in the claims process? A. By encouraging policyholders to submit fraudulent claims for financial gain. B. By implementing robust fraud detection systems and conducting thorough investigations. C. By ignoring suspicious claim patterns to avoid confrontation with policyholders. D. By penalizing policyholders for reporting legitimate claims. Correct answer. B. By implementing robust fraud detection systems and conducting thorough investigations. Explanation. Preventing and detecting fraud is a priority for health insurance companies to maintain the integrity of the claims process and protect against financial losses. Overall, health insurance companies employ multifaceted strategies, including advanced technology, investigations, education, and regulatory compliance, to combat fraud effectively and safeguard the integrity of the claims process. Question 52. In the state of Delaware, what ethical consideration is essential for agents and brokers involved in health insurance sales and service? A. Prioritizing sales targets over customer needs. B. Recommending unsuitable insurance products for financial gain. C. Providing accurate and transparent information to clients. D. Concealing policy terms and conditions from clients. Correct answer. C. Providing accurate and transparent information to clients. Explanation. In Delaware, ethical considerations play a crucial role in health insurance sales and service. Option C, providing accurate and transparent information to clients, is the correct answer for several reasons. By providing accurate and transparent information to clients, agents and brokers uphold ethical standards, comply with regulatory requirements, and promote trust and confidence in the insurance marketplace. Question 53. What rights and protections do consumers have in Delaware regarding health insurance? A. The right to undisclosed fees and charges. B. The right to discriminatory pricing based on health status. C. The right to appeal insurance claim denials. D. The right to limited access to policy information. Correct answer. C. The right to appeal insurance claim denials. Explanation. Consumer rights and protections in Delaware ensure that individuals have recourse in case of disputes or issues related to their health insurance coverage. By affording consumers the right to appeal insurance claim denials, Delaware's consumer protection laws promote fairness, accountability, and access to essential healthcare services for all residents. Question 54. Which practice aligns with fair marketing and sales practices in the health insurance industry in Delaware? A. Employing deceptive advertising tactics to lure customers. B. Providing biased information to steer customers towards specific products. C. Offering incentives to consumers for purchasing unnecessary coverage. D. Ensuring that marketing materials accurately represent insurance products. Correct answer. D. Ensuring that marketing materials accurately represent insurance products. Explanation. Fair marketing and sales practices are essential components of ethical conduct in the health insurance industry, particularly in Delaware. By prioritizing accuracy and transparency in marketing materials, insurance companies and agents uphold ethical standards, comply with regulatory requirements, and promote trust and confidence in the health insurance marketplace. Question 55. Which of the following is considered a supplemental health insurance product in the state of Delaware? A. Term life insurance. B. Homeowners insurance. C. Dental insurance. D. Auto insurance. Correct answer. C. Dental insurance. Explanation. In Delaware, supplemental health insurance products provide additional coverage beyond what is typically offered in standard health insurance plans. Dental insurance is one such product and is designed to help policyholders cover the costs of dental care, including routine checkups, cleanings, and procedures such as fillings, root canals, and extractions. Dental insurance is an essential supplemental health insurance product that helps individuals manage the costs of dental care, promoting overall health and well-being. Question 56. Which of the following is an example of an optional policy rider or endorsement for health insurance in Delaware? A. Pre-existing condition exclusion. B. Accidental death benefit rider. C. Mandatory maternity coverage. D. Prescription drug coverage. Correct answer. B. Accidental death benefit rider. Explanation. In Delaware, optional policy riders or endorsements allow policyholders to customize their health insurance coverage to better suit their individual needs. An example of such a rider is the accidental death benefit rider, which provides an additional benefit if the insured's death is the result of an accident. The accidental death benefit rider is an example of an optional policy rider that policyholders in Delaware may choose to add to their health insurance policies to enhance their coverage. Question 57. What type of insurance product provides coverage for expenses associated with critical illnesses and long-term care in Delaware? A. Term life insurance. B. Disability insurance. C. Critical illness insurance. D. Vision insurance. Correct answer. C. Critical illness insurance. Explanation. Critical illness insurance is designed to provide financial protection in the event of a serious illness, such as cancer, heart attack, or stroke. In Delaware, critical illness insurance policies pay out a lump sum benefit upon the diagnosis of a covered condition, which can be used to cover medical expenses, treatment costs, and other related expenses. Critical illness insurance is a valuable insurance product that can help individuals and families manage the financial impact of serious illnesses and long-term care needs in Delaware. Question 58. Which of the following best describes the tax implications of health insurance premiums and benefits in Delaware? A. Health insurance premiums are tax-deductible for individuals, while benefits received are tax-exempt. B. Health insurance premiums are taxable income for individuals, while benefits received are tax deductible. C. Health insurance premiums are tax deductible for individuals, and benefits received are also taxed. D. Health insurance premiums and benefits are both tax-exempt for individuals. Correct answer. A. Health insurance premiums are tax-deductible for individuals, while benefits received are tax-exempt. Explanation. In Delaware, health insurance premiums paid by individuals are generally tax-deductible, meaning they can be subtracted from taxable income when calculating federal income tax. However, benefits received from health insurance policies, such as reimbursements for medical expenses, are typically tax-exempt and not considered taxable income. It's important for individuals in Delaware to understand the tax implications of health insurance premiums and benefits to maximize potential tax savings and ensure compliance with IRS regulations. Question 59. Which of the following statements regarding compliance with IRS regulations related to health insurance is true in Delaware? A. Employers are required to offer health insurance to all employees, regardless of company size. B. Self-employed individuals are not eligible to deduct health insurance premiums from their taxable income. C. Health insurance providers must report information about policyholders to the IRS. D. Individuals can claim a tax deduction for health insurance premiums paid by their employer. Correct answer. C. Health insurance providers must report information about policyholders to the IRS. Explanation. Under IRS regulations in Delaware and across the United States, health insurance providers are required to report certain information about policyholders to the IRS. This includes details about premiums paid, coverage provided, and other relevant information necessary for tax compliance purposes. Understanding IRS regulations related to health insurance is essential for both policyholders and insurers to ensure compliance and avoid potential penalties. Question 60. What are the reporting requirements for insurers and policyholders regarding health insurance in Delaware? A. Insurers must report policyholder information to the IRS, while policyholders are not required to report any health insurance-related information. B. Policyholders must report premium payments to the IRS, while insurers are responsible for reporting claims payments. C. Both insurers and policyholders must report certain health insurance-related information to the IRS. D. Neither insurers nor policyholders are required to report any health insurance-related information to the IRS. Correct answer. C. Both insurers and policyholders must report certain health insurance-related information to the IRS. Explanation. In Delaware, both health insurance providers, insurers, and policyholders have reporting requirements to the IRS. Insurers are required to report information about policyholders, premiums paid, coverage provided, and other relevant details. Policyholders may also have reporting obligations, such as reporting premium tax credits or certain types of health savings account, HSA, contributions, depending on their individual circumstances. Understanding and fulfilling reporting requirements is crucial for both insurers and policyholders to ensure compliance with IRS regulations and avoid potential penalties. Question 61. In Delaware, what emerging trend in health insurance involves the provision of medical services remotely, often through video calls or mobile apps? A. Value-based care models. B. Telemedicine and remote healthcare services. C. Technological innovations in healthcare delivery. D. Fee-for-service payment arrangements. Correct answer. B. Telemedicine and remote healthcare services. Explanation. Telemedicine and remote healthcare services are an emerging trend in health insurance, particularly in Delaware. This trend involves the use of technology to provide medical consultations, diagnoses, and treatment remotely, without the need for in-person visits to healthcare facilities. Patients can access healthcare professionals through video calls, mobile apps, or other virtual platforms, which can improve access to care, especially in rural or underserved areas. Understanding the emerging trend of telemedicine and remote healthcare services is important for insurance professionals in Delaware to stay abreast of advancements in healthcare delivery methods. Question 62. What emerging trend in health insurance focuses on incentivizing healthcare providers to improve patient outcomes and reduce costs? A. Telemedicine and remote healthcare services. B. Value-based care models. C. Technological innovations in healthcare delivery. D. Traditional fee-for-service payment arrangements. Correct answer. B. Value-based care models. Explanation. Value-based care models are an emerging trend in health insurance, emphasizing quality of care and patient outcomes over the quantity of services provided. In value-based care models, healthcare providers are incentivized to achieve better health outcomes for patients while controlling costs. This may involve alternative payment models such as bundled payments, accountable care organizations, ACOs, and pay-for-performance arrangements. Question 63. Which emerging trend in health insurance leverages advancements in technology to enhance healthcare delivery methods and patient care? A. Telemedicine and remote healthcare services. B. Value-based care models. C. Technological innovations in healthcare delivery. D. Fee-for-service payment arrangements. Correct answer. C. Technological innovations in healthcare delivery. Explanation. Technological innovations in healthcare delivery encompass a broad range of advancements aimed at improving patient care, efficiency, and outcomes. These innovations may include wearable health monitoring devices, electronic health records, EHRs, artificial intelligence, AI, applications for diagnostics, and robotic-assisted surgeries, among others. By leveraging technology, healthcare providers can enhance the quality, accessibility, and cost-effectiveness of healthcare services. Understanding the role of technological innovations in healthcare delivery is crucial for insurance professionals in Delaware to adapt to evolving healthcare trends and support initiatives that enhance patient care and efficiency. Question 64. Which type of life insurance policy provides coverage for a specific period and does not build cash value? A. Term life insurance policies. B. Universal life insurance policies. C. Whole life insurance policies. D. Variable life insurance policies. Correct answer. A. Term life insurance policies. Explanation. Term life insurance policies provide coverage for a predetermined period, such as 10, 20, or 30 years. These policies do not accumulate cash value over time and are designed to provide financial protection to beneficiaries in the event of the insured's death during the term of the policy. Term life insurance is often chosen for its affordability and simplicity, making it suitable for individuals seeking temporary coverage to protect against financial obligations like mortgages or educational expenses. Understanding the characteristics of term life insurance policies is essential for insurance professionals in Delaware to help clients select appropriate coverage based on their needs and financial circumstances. Question 65. Which type of life insurance policy offers flexible premiums and an adjustable death benefit, along with a cash value component that earns interest based on current market rates? A. Whole life insurance policies. B. Universal life insurance policies. C. Term life insurance policies. D. Variable life insurance policies. Correct answer. B. Universal life insurance policies. Explanation. Universal life insurance policies provide policyholders with flexibility in premium payments and death benefit amounts. These policies also include a cash value component, which accumulates interest based on current market rates. Policyholders can adjust their premiums and coverage levels over time to adapt to changing financial circumstances. Universal life insurance offers a combination of flexibility and cash value accumulation, making it a versatile option for individuals seeking long-term life insurance coverage. Understanding the features of universal life insurance policies is important for insurance professionals in Delaware to assist clients in selecting the most suitable coverage for their needs and financial goals. Question 66. Which type of life insurance policy provides coverage for the insured's entire life, fixed premiums, and a cash value component that grows at a guaranteed rate of return? A. Variable life insurance policies. B. Term life insurance policies. C. Universal life insurance policies. D. Whole life insurance policies. Correct answer: D. Whole life insurance policies. Explanation: Whole life insurance policies offer coverage for the insured's entire life, with premiums that remain fixed for the duration of the policy. These policies also include a cash value component that accumulates over time at a guaranteed rate of return. Policyholders can access the cash value through loans or withdrawals during their lifetime, and beneficiaries receive the death benefit upon the insured's passing. Whole life insurance provides both insurance protection and a savings component, making it a popular choice for individuals seeking long-term financial security. Understanding the features of whole life insurance policies is crucial for insurance professionals in Delaware to help clients make informed decisions about their life insurance coverage and financial planning. Question 67. Which type of life insurance policy combines a death benefit with an investment component, allowing policyholders to allocate their premiums among various investment options? A. Variable life insurance policies. B. Final expense insurance policies. C. Term life insurance policies. D. Whole life insurance policies. Correct answer: A. Variable life insurance policies. Explanation: Variable life insurance policies offer policyholders the opportunity to allocate their premiums among different investment options such as stocks, bonds, or mutual funds. The cash value and death benefit of these policies may fluctuate based on the performance of the underlying investments. Variable life insurance provides potential for higher returns but also involves investment risk, making it important for policyholders to carefully monitor and manage their investment choices. Understanding the features of variable life insurance policies is essential for insurance professionals in Delaware to assist clients in selecting appropriate coverage based on their risk tolerance and investment objectives. Question 68. Which type of life insurance policy is specifically designed to cover funeral and burial expenses, typically with lower coverage amounts? A. Variable life insurance policies. B. Final expense insurance policies. C. Universal life insurance policies. D. Term life insurance policies. Correct answer: B. Final expense insurance policies. Explanation: Final expense insurance policies, also known as burial insurance, are specifically designed to cover the costs associated with funeral and burial expenses. These policies typically have lower coverage amounts compared to traditional life insurance policies, making them more affordable for seniors who may be on fixed incomes. Final expense insurance provides peace of mind to policyholders and their families by ensuring that end-of-life expenses are covered without imposing a financial burden on loved ones. Understanding the purpose and features of final expense insurance policies is important for insurance professionals in Delaware to assist clients, especially seniors, in planning for end-of-life expenses. Question 69. Which policy provision allows the policyholder to receive an additional benefit if death occurs as a result of an accident? A. Suicide provision. B. Accelerated death benefit. C. Accidental death benefit rider. D. Guaranteed insurability rider. Correct answer: C. Accidental death benefit rider. Explanation: An accidental death benefit rider is a provision that can be added to a life insurance policy to provide an additional benefit if the insured's death is the result of an accident. This rider is designed to supplement the policy's standard death benefit and provides financial protection in the event of accidental death, such as a car accident or a fall. Policyholders can choose to add an accidental death benefit rider to their policy for an additional premium, ensuring that their loved ones receive extra financial support in the event of a tragic accident. Understanding the purpose and benefits of an accidental death benefit rider is important for insurance professionals in Delaware to assist clients in customizing their life insurance coverage to meet their specific needs and concerns. Question 70. Which rider provides a benefit payout upon diagnosis of a serious illness such as cancer or heart attack? A. Critical illness rider. B. Disability income rider. C. Long-term care insurance rider. D. Accidental death benefit rider. Correct answer: A. Critical illness rider. Explanation: a critical illness rider is an optional provision that can be added to a life insurance policy to provide a benefit payout if the insured is diagnosed with a covered serious illness, such as cancer, heart attack, stroke, or organ transplant. The benefit payout is typically a lump sum payment that can help cover medical expenses, treatment costs, and other financial obligations during a challenging time. It offers policyholders additional financial protection beyond the traditional death benefit, providing peace of mind and support when facing a critical health condition. Understanding the purpose and benefits of a critical illness rider is essential for insurance professionals in Delaware to assist clients in selecting appropriate coverage based on their health and financial needs. Question 71. Which rider provides a monthly income benefit if the insured becomes disabled and is unable to work due to injury or illness? A. Disability income rider. B. Critical illness rider. C. Long-term care insurance rider. D. Accelerated death benefit rider. Correct answer: A. Disability income rider. Explanation: a disability income rider is a provision that can be added to a life insurance policy to provide a monthly income benefit if the insured becomes disabled and is unable to work due to injury or illness. The rider ensures that the insured receives a steady stream of income during the disability period, helping to cover living expenses, mortgage payments, and other financial obligations. It offers financial protection and peace of mind to policyholders and their families by replacing lost income and maintaining their standard of living during a challenging time. Understanding the purpose and benefits of a disability income rider is important for insurance professionals in Delaware to assist clients in protecting their income and financial well-being in the event of disability. Question 72. Which rider provides coverage for expenses associated with long-term care services, such as nursing home care or home health care? A. Long-term care insurance rider. B. Critical illness rider. C. Disability income rider. D. Waiver of premium rider. Correct answer: A. Long-term care insurance rider. Explanation: a long-term care insurance rider is an optional provision that can be added to a life insurance policy to cover expenses associated with long-term care services, such as nursing home care, assisted living, or home health care. This rider provides financial support to policyholders who require extended care due to chronic illness, disability, or cognitive impairment. It helps cover the costs of long-term care, which can be substantial and potentially deplete retirement savings or assets if not properly planned for. Understanding the purpose and benefits of a long-term care insurance rider is important for insurance professionals in Delaware to assist clients in planning for potential long-term care needs and protecting their financial security. Question 73. Which rider allows the policyholder to add coverage for their spouse or child under the same policy? A. Spousal or child term rider. B. Accidental death benefit rider. C. Accelerated death benefit rider. D. Guaranteed insurability rider. Correct answer: A. Spousal or child term rider. Explanation: the spousal or child term rider is an optional provision that allows the policyholder to add coverage for their spouse or child under the same life insurance policy. This rider provides term insurance coverage for the spouse or child, typically for a specified duration and amount. It offers additional financial protection for the family by extending coverage to other family members, ensuring their financial security in the event of an unexpected death. Understanding the purpose and benefits of a spousal or child term rider is essential for insurance professionals in Delaware to assist clients in customizing their life insurance coverage to meet their family's needs. Question 74. Which stage of the underwriting process involves evaluating the risk associated with different types of insurance, including property, liability, and health? A. Risk assessment. B. Application review. C. Underwriting decision. D. Policy issuance. Correct answer: A. Risk assessment. Explanation: risk assessment is a critical stage of the underwriting process that involves evaluating the risk associated with different types of insurance, including property, liability, health, and others. During this stage, underwriters analyze various factors such as the applicant's health history, lifestyle, occupation, financial status, and the type of insurance being applied for. They assess the likelihood of the insured event occurring and determine the appropriate premium rates and coverage terms based on the level of risk identified. Understanding the risk assessment stage of the underwriting process is essential for insurance professionals in Delaware to accurately evaluate applicants' insurability and determine appropriate coverage terms and premium rates. Question 75. What tools and methodologies are commonly used in underwriting to assess the risk associated with insurance policies? A. Medical exams and lab tests. B. Actuarial tables and mortality studies. C. Credit reports and financial statements. D. All of the above. Correct answer: D. All of the above. Explanation: underwriters use a variety of tools and methodologies to assess the risk associated with insurance policies and determine the appropriate premium rates and coverage terms. These tools may include: A. Medical exams and lab tests. Underwriters may require applicants to undergo medical exams and laboratory tests to evaluate their health status and identify any pre-existing conditions that may impact their insurability. B. Actuarial tables and mortality studies. Actuarial tables and mortality studies provide statistical data on life expectancy and mortality rates based on factors such as age, gender, occupation, and health status. Underwriters use this data to assess the risk of death and calculate premium rates. C. Credit reports and financial statements. Underwriters may review applicants' credit reports and financial statements to assess their financial stability and ability to pay premiums. A strong credit history and financial standing may indicate lower risk and result in more favorable underwriting decisions. By utilizing these tools and methodologies, underwriters can accurately evaluate risk, ensure appropriate pricing, and maintain the financial stability of insurance companies. Understanding the various tools and methodologies used in underwriting is essential for insurance professionals in Delaware to effectively assess risk and make informed underwriting decisions. Question 76. Which tool is commonly used in life insurance underwriting to assess mortality risk and determine premium rates? A. Medical exams and lab tests. B. Actuarial tables and mortality tables. C. Credit reports and financial statements. D. Policy illustrations. Correct answer: B. Actuarial tables and mortality tables. Explanation: actuarial tables and mortality tables are fundamental tools used in life insurance underwriting. These tables provide statistical data on life expectancy and mortality rates based on various factors such as age, gender, occupation, and health status. Underwriters use this data to assess the risk of death associated with an applicant and determine the appropriate premium rates for life insurance policies. Actuarial tables help insurers make informed decisions regarding policy issuance by predicting the likelihood of policyholders making claims. Understanding the role of actuarial tables and mortality tables in life insurance underwriting is crucial for insurance professionals in Delaware to accurately assess risk and set appropriate premium rates. Question 77. What is the primary role of underwriting in determining policy premiums and coverage in life insurance? A. Identifying potential policyholders. B. Assessing mortality risk and setting premium rates. C. Marketing and selling insurance policies. D. Administering policyholder claims. Correct answer: B. Assessing mortality risk and setting premium rates. Explanation. The primary role of underwriting in life insurance is to assess mortality risk associated with potential policyholders and determine the appropriate premium rates and coverage terms. Underwriters evaluate various factors such as the applicant's age, gender, health history, lifestyle, and occupation to assess the likelihood of death during the policy term. Based on this assessment, underwriters set premium rates that reflect the level of risk and determine coverage terms such as the death benefit amount and any policy riders or exclusions. Understanding the pivotal role of underwriting in assessing mortality risk and setting premium rates is essential for insurance professionals in Delaware to effectively manage risk and ensure the financial stability of insurance companies. Question 78. In permanent life insurance policies, what does cash value accumulation refer to? A. The amount payable upon the insured's death. B. The portion of premiums invested that grows over time. C. The surrender value of the policy. D. The guaranteed minimum interest rate. Correct answer. B. The portion of premiums invested that grows over time. Explanation. Cash value accumulation in permanent life insurance policies refers to the portion of premiums paid by the policyholder that is invested by the insurance company and grows over time. This cash value component serves as a savings or investment feature of permanent life insurance, allowing policyholders to build up a cash reserve that can be accessed during the policy's lifetime. The cash value grows tax-deferred and can be used for various purposes such as policy loans, withdrawals, or to supplement retirement income. Understanding cash value accumulation in permanent life insurance policies is essential for insurance professionals in Delaware to effectively explain policy features and benefits to clients and help them make informed decisions about their insurance coverage. Question 79. What consequence may policyholders face for early termination of their life insurance policy? A. Increased death benefit. B. Decreased surrender charges. C. Surrender charges and penalties. D. Tax deductions. Correct answer. C. Surrender charges and penalties. Explanation. When a policyholder terminates their life insurance policy prematurely, they may incur surrender charges and penalties imposed by the insurance company. Surrender charges are fees levied by the insurer to cover administrative costs and commissions associated with the issuance of the policy. These charges are typically highest in the early years of the policy and gradually decrease over time. Additionally, policyholders may also face penalties for withdrawing cash value or surrendering the policy before a specified period, known as the surrender period, elapses. These penalties are designed to discourage early policy termination and protect the insurer's interests. Understanding the implications of surrender charges and penalties for early policy termination is essential for policyholders in Delaware to make informed decisions regarding their life insurance coverage. Question 80. What option is available to policyholders who need immediate funds and wish to borrow against their life insurance policy? A. Surrendering the policy. B. Terminating the policy. C. Taking out a policy loan. D. Selling the policy. Correct answer. C. Taking out a policy loan. Explanation. Policyholders who require immediate funds may opt to take out a policy loan against the cash value of their life insurance policy. Policy loans allow policyholders to borrow a portion of the cash value accrued within the policy while keeping the policy in force. The loan is secured by the cash value and accrues interest, which the policyholder is responsible for repaying. Policy loans provide policyholders with a convenient source of liquidity without the need to surrender or terminate the policy, thereby maintaining the death benefit and any other policy features. Understanding the availability and implications of policy loans is crucial for policyholders in Delaware who require immediate access to funds while maintaining their life insurance coverage. Question 81. What rights do life insurance policy owners typically have regarding the designation of beneficiaries and policy assignments? A. Limited ability to change beneficiaries or assign the policy. B. No authority to change beneficiaries or assign the policy. C. Full authority to change beneficiaries or assign the policy. D. Authority to change beneficiaries but not assign the policy. Correct answer. C. Full authority to change beneficiaries or assign the policy. Explanation. Life insurance policy owners generally have full authority to change beneficiaries or assign the policy to another party. They can exercise these rights during the lifetime of the policy, subject to any restrictions outlined in the policy contract or applicable state laws. Changing beneficiaries allows policy owners to designate who will receive the death benefit upon their passing, while assigning the policy involves transferring ownership rights to another individual or entity. These rights provide flexibility for policy owners to adapt their coverage to changing circumstances and ensure that their insurance proceeds are distributed according to their wishes. Understanding the rights associated with changing beneficiaries and assigning life insurance policies is essential for policy owners in Delaware to effectively manage their insurance portfolios and ensure their intentions are reflected in their coverage arrangements. Question 82. Which annuity payout option provides payments for the duration of the annuitant's lifetime only? A. Joint life annuity. B. Period certain annuity. C. Life-only annuity. D. Life with period certain annuity. Correct answer. C. Life-only annuity. Explanation. In a life-only annuity, the annuity payments are made to the annuitant for their lifetime. Once the annuitant passes away, the payments cease, regardless of how much has been paid out. This option provides a guaranteed income stream for the annuitant's lifetime but does not offer any survivor benefits for beneficiaries. Understanding the features and implications of different annuity payout options is crucial for individuals in Delaware considering annuity contracts to secure retirement income. Question 83. What tax implications are associated with withdrawals and distributions from an annuity? A. Tax-deferred growth with tax-free withdrawals. B. Tax-free growth with taxable withdrawals. C. Taxable growth with tax-free withdrawals. D. Taxable growth with taxable withdrawals. Correct answer. D. Taxable growth with taxable withdrawals. Explanation. Withdrawals and distributions from annuities are generally subject to taxation. The growth within the annuity, known as earnings, is tax-deferred until withdrawn. When withdrawals are made, the earnings portion is taxed as ordinary income, while the portion representing the return of the annuitant's original investment, known as the cost basis, is not taxed. If withdrawals are taken before reaching age 59 and a half, they may also be subject to a 10% early withdrawal penalty, unless an exception applies. Understanding the tax treatment of annuity withdrawals is essential for individuals in Delaware to effectively plan for retirement and manage their tax liabilities. Question 84. What do annuity surrender periods and surrender charges refer to? A. The duration during which annuity payments are made. B. The period during which annuity contributions are made. C. The time frame during which annuity withdrawals are permitted without penalty. D. The period during which annuity payouts can be modified. Correct answer. C. The time frame during which annuity withdrawals are permitted without penalty. Explanation. Annuity surrender periods refer to the duration, usually several years after purchase, during which annuity withdrawals or surrenders may incur surrender charges or penalties if they exceed a certain threshold. Surrender charges are fees imposed by the insurance company to discourage early withdrawals and protect against policy lapses. These charges typically decrease over the surrender period until they expire, allowing annuity holders to access their funds without penalty. Understanding the implications of annuity surrender periods and surrender charges is crucial for annuity holders in Delaware to avoid unnecessary fees and make informed decisions about accessing their funds. Question 85. What are the options available to beneficiaries regarding annuity death benefits? A. Lump sum payment or rollover. B. Installment payments over a fixed period. C. Annuity payments for the beneficiary's lifetime. D. All of the above. Correct answer: D. All of the above. Explanation: beneficiaries of annuities typically have several options for receiving death benefits. They can choose to receive a lump sum payment, which provides immediate access to the entire death benefit. Alternatively, beneficiaries may opt for installment payments over a fixed period, providing a steady income stream for a predetermined duration. Beneficiaries can also select annuity payments, which provide a regular income stream for the beneficiary's lifetime, similar to the original annuitant. Understanding the available beneficiary options for annuity death benefits is crucial for individuals in Delaware to make informed decisions regarding estate planning and financial security. Question 86. What are the requirements for insurance licensing and continuing education for agents in Delaware? A. Completion of a pre-licensing education course and passing the licensing exam. B. Renewal of license every 2 years and completion of a minimum number of continuing education credits. C. Obtaining sponsorship from an insurance company and passing a background check. D. All of the above. Correct answer: B. Renewal of license every 2 years and completion of a minimum number of continuing education credits. Explanation: in Delaware, insurance agents are required to renew their licenses every 2 years. As part of the renewal process, agents must complete a specified number of continuing education credits. These credits ensure that agents stay updated on industry regulations, product knowledge, ethics, and other relevant topics. By completing continuing education requirements, agents demonstrate their commitment to professional development and maintaining high standards of service. Understanding the licensing and continuing education requirements is essential for insurance agents in Delaware to maintain compliance with state regulations and provide competent service to clients. Question 87. What role do state insurance departments play in regulating insurance activities in Delaware? A. Enforcing federal insurance laws and regulations. B. Issuing insurance licenses to agents and brokers. C. Regulating insurance rates and policy forms. D. All of the above. Correct answer: C. Regulating insurance rates and policy forms. Explanation: state insurance departments, including the Delaware Department of Insurance, are primarily responsible for regulating insurance activities within their respective states. One of their key roles is regulating insurance rates and policy forms to ensure that they are fair, reasonable, and comply with state laws and regulations. This oversight helps protect consumers from unfair practices and ensures the stability of the insurance marketplace. State insurance departments also handle consumer complaints, conduct market conduct examinations, and provide consumer education and assistance. Understanding the role of state insurance departments is crucial for insurance professionals and consumers in Delaware to navigate the regulatory landscape and ensure compliance with applicable laws and regulations. Question 88. What is the primary responsibility of state insurance departments in Delaware regarding insurance rates and forms? A. Enforcing federal insurance laws. B. Regulating insurance rates and policy forms. C. Conducting market research. D. Issuing insurance licenses. Correct answer: B. Regulating insurance rates and policy forms. Explanation: state insurance departments, including the Delaware Department of Insurance, play a crucial role in regulating insurance rates and policy forms within the state. This involves reviewing and approving insurance rates to ensure they are fair, reasonable, and comply with state laws and regulations. Additionally, state insurance departments oversee the development and approval of insurance policy forms to safeguard consumer interests and maintain market stability. By regulating rates and forms, state insurance departments aim to protect consumers from unfair practices and maintain a competitive insurance marketplace. Question 89. Which measures are typically implemented by state insurance departments in Delaware to prevent and detect insurance fraud? A. Conducting background checks on insurance agents. B. Regulating insurance rates and policy forms. C. Providing consumer education and assistance. D. Establishing fraud investigation units. Correct answer. D. Establishing fraud investigation units. Explanation. State insurance departments in Delaware take proactive measures to prevent and detect insurance fraud. One key measure is the establishment of fraud investigation units dedicated to investigating suspected instances of insurance fraud. These units work to uncover fraudulent activities such as false claims, premium evasion, and deceptive practices. By identifying and prosecuting perpetrators of insurance fraud, state insurance departments help protect both insurers and policyholders from financial losses and maintain the integrity of the insurance industry. Question 90. In the context of insurance sales and recommendations in Delaware, what constitutes a conflict of interest? A. Offering discounts on insurance premiums. B. Providing clients with unbiased advice. C. Recommending insurance products that result in higher commissions. D. Disclosing potential risks associated with insurance policies. Correct answer. C. Recommending insurance products that result in higher commissions. Explanation. A conflict of interest arises in insurance sales and recommendations when an insurance agent or broker prioritizes their financial interests over the best interests of the client. Recommending insurance products solely based on the commissions or incentives received, rather than considering the suitability and needs of the client, constitutes a conflict of interest. To maintain ethical conduct, insurance professionals in Delaware should disclose any potential conflicts of interest to clients and prioritize providing unbiased advice that aligns with the client's needs and financial goals. This helps build trust and ensures transparency in the insurance sales process. Question 91. What ethical considerations should insurance professionals in Delaware prioritize when handling underwriting decisions and processing claims? A. Maximizing insurer profits. B. Speeding up claim settlements. C. Fairness and impartiality. D. Minimizing policy coverage. Correct answer. C. Fairness and impartiality. Explanation. Insurance professionals in Delaware must prioritize fairness and impartiality when handling underwriting decisions and processing claims. This means making objective assessments based on relevant criteria without bias or discrimination. Upholding ethical standards ensures that policyholders are treated equitably and that claims are settled in a timely and transparent manner. By prioritizing fairness, insurance professionals build trust with policyholders and maintain the integrity of the insurance industry. Question 92. Which set of guidelines governs the behavior of insurance agents and brokers in Delaware, outlining expectations for ethical conduct? A. Federal regulations and laws. B. Company policies and procedures. C. Professional codes of conduct and industry standards. D. Personal beliefs and values. Correct answer. C. Professional codes of conduct and industry standards. Explanation. Insurance agents and brokers in Delaware are expected to adhere to professional codes of conduct and industry standards that outline expectations for ethical conduct. These guidelines govern interactions with clients, handling of insurance transactions, and representation of insurance companies. By following these codes, agents and brokers demonstrate professionalism, integrity, and trustworthiness, contributing to a positive reputation within the industry and among consumers. Question 93. When engaging in marketing and advertising activities in Delaware, what ethical issues should insurance professionals consider? A. Exaggerating policy benefits. B. Targeting vulnerable consumer groups. C. Providing accurate and truthful information. D. Concealing policy exclusions. Correct answer. C. Providing accurate and truthful information. Explanation. Insurance professionals in Delaware must consider providing accurate and truthful information when engaging in marketing and advertising activities. This ethical consideration ensures that consumers receive clear and transparent communication about insurance products and services. Misleading or deceptive marketing practices, such as exaggerating policy benefits or concealing important policy details, can damage consumer trust and lead to regulatory scrutiny. By prioritizing honesty and transparency in marketing efforts, insurance professionals uphold ethical standards and build trust with consumers. Question 94. What is the primary purpose of health insurance in Delaware? A. Generating profits for insurance companies. B. Providing financial protection against healthcare expenses. C. Funding government healthcare programs. D. Promoting healthy lifestyle choices. Correct answer. B. Providing financial protection against healthcare expenses. Explanation. The primary purpose of health insurance in Delaware is to provide individuals and families with financial protection against healthcare expenses. Health insurance helps policyholders mitigate the financial burden associated with medical treatments, doctor visits, hospital stays, prescription drugs, and other healthcare services. By spreading the risk among a large group of policyholders, health insurance enables individuals to access necessary medical care without facing significant financial hardship. Question 95. Which type of health insurance plan typically offers coverage to employees of a specific employer or organization in Delaware? A. Individual health insurance plan. B. Group health insurance plan. C. Medicaid. D. Medicare. Correct answer. B. Group health insurance plan. Explanation. In Delaware, a group health insurance plan typically offers coverage to employees of a specific employer or organization. These plans are often provided as part of an employment benefit package and cover a group of individuals under a single policy. Group health insurance plans leverage the principle of risk pooling, where the premiums of all members contribute to covering the healthcare expenses of the group. This type of insurance can offer cost savings and broader coverage compared to individual plans. Question 96. Which type of health insurance plan in Delaware typically requires policyholders to choose a primary care physician, PCP, and obtain referrals for specialist care? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, PPO. C. Exclusive Provider Organization, EPO. D. Point of Service, POS, plan. Correct answer. A. Health Maintenance Organization, HMO. Explanation. In Delaware, a health maintenance organization, HMO, typically requires policyholders to choose a primary care physician, PCP, and obtain referrals for specialist care. HMOs focus on preventive care and cost containment by coordinating healthcare services through a network of providers. Policyholders must seek medical care within the HMO's network, and referrals are usually required to see specialists. While HMOs offer comprehensive coverage and lower out-of-pocket costs, they may limit flexibility in choosing healthcare providers. Question 97. What is the purpose of coinsurance in a health insurance policy in Delaware? A. To limit the number of covered services. B. To determine the percentage of costs paid by the insured. C. To establish the maximum amount the insured must pay out of pocket. D. To require the insured to pay a specified amount before the insurer begins to pay. Correct answer. B. To determine the percentage of costs paid by the insured. Explanation. In Delaware, coinsurance in a health insurance policy refers to the percentage of covered medical expenses that the insured individual is responsible for paying after the deductible has been met. It is typically expressed as a percentage, such as 20% or 30%. The purpose of coinsurance is to share the costs of healthcare services between the insurer and the insured, with the insured paying a certain percentage of the covered expenses. Question 98. Which of the following is an example of a common policy clause in a health insurance policy in Delaware? A. Guaranteed renewable provision. B. Exclusions for pre-existing conditions. C. Coordination of benefits. D. Mandatory coverage for preventive services. Correct answer. C. Coordination of benefits. Explanation. In Delaware, coordination of benefits is a common policy clause in a health insurance policy. This clause helps prevent overpayment when a policyholder is covered under more than one health insurance plan. It specifies how multiple insurers will coordinate payment of claims to avoid duplication of benefits. The coordination of benefits provision typically outlines the order of liability among insurers and ensures that the total benefits received do not exceed the total allowable expenses. Question 99. What do coverage limits and exclusions specify in a health insurance policy in Delaware? A. The maximum amount the insured can pay for premiums. B. The services or conditions not covered by the policy. C. The lifetime benefits available under the policy. D. The frequency of premium payments required. Correct answer. B. The services or conditions not covered by the policy. Explanation. In Delaware, coverage limits and exclusions in a health insurance policy specify the services or conditions that are not covered by the policy. These provisions define the scope of coverage and outline situations where the insurer will not provide benefits. Common exclusions may include cosmetic procedures, experimental treatments, and services not deemed medically necessary. Policyholders should carefully review these provisions to understand the extent of their coverage and any potential limitations on benefits. Question 100. What is the primary purpose of the underwriting process for health insurance in Delaware? A. To determine the premium rates for the policy. B. To assess the health status of the applicant. C. To establish the coverage limits of the policy. D. To process claims for medical expenses. Correct answer. B. To assess the health status of the applicant. Explanation. In Delaware, the underwriting process for health insurance involves evaluating the health status and risk factors of the applicant to determine their insurability. Insurers assess various factors such as medical history, age, lifestyle habits, occupation, and pre-existing conditions to determine the level of risk associated with insuring the individual. This information helps insurers establish appropriate premium rates and coverage options based on the applicant's health profile. Question 101. Which of the following factors may affect the insurability of an individual applying for health insurance in Delaware? A. Gender and marital status. B. Occupation and income level. C. Educational background and hobbies. D. Geographic location and climate. Correct answer. B. Occupation and income level. Explanation. In Delaware, factors such as occupation and income level can significantly impact the insurability of an individual applying for health insurance. Certain occupations may involve higher risks or exposure to hazardous conditions, which can affect the likelihood of insurance approval or the premium rates offered. Similarly, income level may influence an individual's ability to afford health insurance premiums or access certain coverage options. Question 102. What is the process of risk selection and classification in health insurance underwriting in Delaware? A. Assigning policyholders to specific risk pools based on age. B. Categorizing applicants into different risk categories. C. Offering discounts to individuals with pre-existing conditions. D. Determining the frequency of medical exams required for applicants. Correct answer. B. Categorizing applicants into different risk categories. Explanation. In Delaware, risk selection and classification in health insurance underwriting involve categorizing applicants into different risk categories based on factors such as age, health status, lifestyle habits, and medical history. Insurers use this information to assess the level of risk associated with each applicant and determine the appropriate premium rates and coverage options. Applicants deemed to be higher risk may face higher premiums or coverage restrictions, while those with lower risk profiles may receive more favorable rates and coverage terms. Question 103. Which of the following is true regarding state and federal regulations governing health insurance in Delaware? A. State regulations supersede federal regulations. B. Federal regulations always take precedence over state regulations. C. State and federal regulations operate independently of each other. D. State and federal regulations may complement each other and work in conjunction. Correct answer. D. State and federal regulations may complement each other and work in conjunction. Explanation. In Delaware, as in other states, health insurance regulations are governed by both state and federal laws. While federal regulations, such as those outlined in the Affordable Care Act, ACA, and HIPAA, establish overarching standards and requirements, states also have the authority to enact their own regulations to address specific healthcare needs and priorities. In many cases, state and federal regulations work together to ensure comprehensive coverage and consumer protections for residents. Question 104. Which provision of the Affordable Care Act, ACA, requires most individuals to maintain minimum essential health coverage or pay a penalty? A. Medicaid expansion. B. Employer mandate. C. Individual mandate. D. Essential health benefits. Correct answer. C. Individual mandate. Explanation. The individual mandate is a key provision of the Affordable Care Act, ACA, that requires most individuals to maintain minimum essential health coverage or pay a penalty when filing taxes. This provision was implemented to encourage broad participation in the health insurance market and help stabilize premiums by spreading risk across a larger pool of insured individuals. While the individual mandate was effectively repealed at the federal level in 2019, some states, including Delaware, have implemented their own individual mandates to ensure continuous coverage. Question 105. Which aspect of HIPAA regulations focuses on protecting the privacy and security of individuals' health information? A. Title I. Healthcare access, portability, and renewability. B. Title II. Preventing healthcare fraud and abuse, administrative simplification, medical liability reform. C. Title III. Tax-related health provisions. D. Title IV. Application and enforcement of group health plan requirements. Correct answer. B. Title II. Preventing healthcare fraud and abuse, administrative simplification, medical liability reform. Explanation. Title II of HIPAA, known as the Administrative Simplification Provisions, includes regulations aimed at protecting the privacy and security of individuals' health information. These provisions establish standards for the electronic exchange, privacy, and security of health information, as well as requirements for safeguarding patient data. HIPAA's Privacy Rule and Security Rule, implemented under Title II, set forth comprehensive protections and requirements for covered entities and their business associates to ensure the confidentiality, integrity, and availability of protected health information. FI. Question 106. What is the primary purpose of health insurance exchanges, also known as marketplaces, in Delaware? A. To provide healthcare services directly to uninsured individuals. B. To regulate insurance premiums for all health insurance plans. C. To offer a platform for individuals and small businesses to compare and purchase health insurance plans. D. To determine eligibility for Medicaid coverage. Correct answer. C. To offer a platform for individuals and small businesses to compare and purchase health insurance plans. Explanation. Health insurance exchanges, or marketplaces, serve as online platforms where individuals, families, and small businesses can compare and purchase health insurance plans. These exchanges were established under the Affordable Care Act, ACA, to create a centralized marketplace where consumers can shop for coverage, compare prices and benefits, and enroll in a plan that meets their needs. In Delaware, the health insurance marketplace offers a range of options from different insurance providers, providing transparency and facilitating informed decision-making for consumers. Question 107. What is a key feature of enrollment periods in Delaware's health insurance marketplace? A. Enrollment periods are open year-round with no restrictions. B. Enrollment is limited to specific times of the year, with exceptions for qualifying life events. C. Enrollment is only available to individuals with pre-existing conditions. D. Enrollment is restricted to Medicaid beneficiaries. Correct answer: B. Enrollment is limited to specific times of the year, with exceptions for qualifying life events. Explanation: enrollment periods in Delaware's health insurance marketplace are typically limited to specific times of the year, known as open enrollment periods. During these designated periods, individuals and families can enroll in or make changes to their health insurance coverage. Outside of the open enrollment period, individuals may still be eligible to enroll or make changes to their coverage if they experience qualifying life events, such as marriage, birth of a child, or loss of other coverage. These events trigger special enrollment periods, allowing individuals to enroll or make changes outside of the regular enrollment period. Question 108. What financial assistance may be available to eligible individuals purchasing health insurance through Delaware's health insurance marketplace? A. Low-interest loans for premium payments. B. Tax deductions for out-of-pocket healthcare expenses. C. Subsidies to help lower monthly premiums. D. Refundable tax credits for medical expenses. Correct answer: C. Subsidies to help lower monthly premiums. Explanation: Delaware's health insurance marketplace offers subsidies and premium tax credits to eligible individuals and families to help lower the cost of monthly premiums for health insurance plans. These subsidies are provided by the federal government and are based on income and household size. Eligible individuals can apply for subsidies through the marketplace, and the amount of assistance received is applied directly to reduce the monthly premium costs of the chosen health insurance plan. Subsidies aim to make health insurance coverage more affordable and accessible to individuals and families with lower incomes. Question 109. What is a primary characteristic of managed care organizations, MCOs, in Delaware's health insurance landscape? A. They primarily focus on fee-for-service reimbursement models. B. They do not involve any form of provider networks. C. They emphasize cost containment and coordination of care. D. They only cover catastrophic health events. Correct answer: C. They emphasize cost containment and coordination of care. Explanation: managed care organizations, MCOs, in Delaware prioritize cost containment and coordination of care as key components of their healthcare delivery model. Unlike traditional fee-for-service models, MCOs employ strategies such as utilization management, provider networks, and preventive care initiatives to control healthcare costs while maintaining quality of care. By emphasizing care coordination and preventive measures, MCOs aim to improve health outcomes for their members while managing healthcare expenses. Question 110. What is a fundamental aspect of network structures within managed care organizations, MCOs, operating in Delaware? A. They do not limit access to specific healthcare providers. B. They involve only one healthcare provider in the network. C. They offer unlimited coverage for out-of-network services. D. They establish contracts with specific healthcare providers. Correct answer: D. They establish contracts with specific healthcare providers. Explanation: network structures within managed care organizations, MCOs, in Delaware involve establishing contracts with specific healthcare providers, including hospitals, physicians, specialists, and other healthcare facilities. These contracted providers form the MCO's network and typically agree to provide services to MCO members at negotiated rates. By contracting with specific providers, MCOs can offer their members access to a network of healthcare professionals while also controlling costs through negotiated reimbursement rates. Question 111. What is the primary purpose of utilization review within managed care organizations, MCOs, in Delaware? A. To ensure unlimited access to healthcare services for all members. B. To minimize the use of preventive care services. C. To evaluate the medical necessity and appropriateness of healthcare services. D. To encourage unnecessary hospital admissions. Correct answer. C. To evaluate the medical necessity and appropriateness of healthcare services. Explanation. Utilization review is a key component of managed care organizations, MCOs, in Delaware, aimed at evaluating the medical necessity and appropriateness of healthcare services provided to members. Through utilization review processes, MCOs assess the need for certain medical treatments, procedures, or hospital admissions to ensure that resources are used efficiently and effectively. By identifying unnecessary or inappropriate services, MCOs can promote quality care delivery while controlling healthcare costs. Question 112. Which of the following accurately describes the process of claims adjudication in health insurance, particularly in Delaware? A. Claims adjudication involves denying all claims initially and then reviewing them upon appeal. B. Claims adjudication is the process of automatically approving all submitted claims. C. Claims adjudication involves reviewing claims for accuracy, completeness, and compliance with policy terms. D. Claims adjudication is solely the responsibility of healthcare providers, not insurers. Correct answer. C. Claims adjudication involves reviewing claims for accuracy, completeness, and compliance with policy terms. Explanation. In Delaware, as in other states, claims adjudication in health insurance involves the careful review of submitted claims by the insurer to ensure accuracy, completeness, and compliance with policy terms. This process aims to determine whether the services rendered are covered under the policy and if the charges are reasonable and necessary. Insurers assess claims based on various factors, including the policy provisions, medical necessity, and any applicable regulations or guidelines. Question 113. What is the primary purpose of an explanation of benefits, EOB, and claims statement provided to policyholders in Delaware? A. To confuse policyholders with complex medical terminology. B. To summarize the policyholder's healthcare history. C. To outline the services rendered, amounts billed, and the insurer's payment or denial decision. D. To promote additional healthcare services to policyholders. Correct answer. C. To outline the services rendered, amounts billed, and the insurer's payment or denial decision. Explanation. In Delaware, an explanation of benefits, EOB, and claims statement serve the crucial purpose of informing policyholders about the details of their healthcare claims. These documents outline the services received, the amounts billed by healthcare providers, any applicable deductibles or copayments, and the insurer's decision regarding payment or denial of the claim. By providing transparent information about claim processing, EOBs and claims statements help policyholders understand their coverage, expenses, and any actions they may need to take regarding outstanding balances or denied claims. Question 114. How do health insurers in Delaware contribute to fraud prevention and detection in the context of health insurance claims? A. By ignoring irregularities in claims processing to avoid confrontation with healthcare providers. B. By implementing robust systems and processes to identify suspicious claims patterns and behaviors. C. By encouraging policyholders to submit fraudulent claims for personal gain. D. By delaying claims processing indefinitely to discourage fraudulent activity. Correct answer. B. By implementing robust systems and processes to identify suspicious claims patterns and behaviors. Explanation. Health insurers in Delaware play a proactive role in fraud prevention and detection by implementing robust systems and processes designed to identify suspicious claims patterns and behaviors. These systems utilize advanced analytics and data mining techniques to flag potential instances of fraud, waste, or abuse. Insurers also collaborate with law enforcement agencies, regulatory bodies, and industry stakeholders to share information and best practices in combating healthcare fraud. By detecting and addressing fraudulent activity promptly, insurers help safeguard the integrity of the healthcare system and protect the interests of policyholders. Question 115. Which of the following best describes the ethical considerations in health insurance sales and service, particularly in Delaware? A. Withholding relevant information from clients to secure a sale. B. Disclosing all pertinent information to clients and providing recommendations based on their needs. C. Pressuring clients into purchasing unnecessary coverage. D. Promising guaranteed outcomes without verifying policy terms. Correct answer: B. Disclosing all pertinent information to clients and providing recommendations based on their needs. Explanation: in Delaware, ethical considerations in health insurance sales and service require agents to act in the best interests of their clients. This includes disclosing all relevant information about policies, coverage options, premiums, and exclusions. Agents should provide recommendations tailored to the individual needs and circumstances of each client, ensuring they understand the implications of their choices. By maintaining transparency and integrity in their interactions, agents uphold consumer trust and contribute to a positive reputation for the insurance industry. Question 116. What rights and protections do consumers have in Delaware regarding health insurance? A. Consumers have no rights or protections when purchasing health insurance. B. Consumers have the right to cancel their health insurance policy at any time without consequences. C. Consumers have the right to access accurate information about available health insurance options. D. Consumers have the obligation to accept any policy offered by insurers. Correct answer: C. Consumers have the right to access accurate information about available health insurance options. Explanation: in Delaware, consumers have important rights and protections when it comes to health insurance. One of these rights is the right to access accurate information about available health insurance options. This includes information about coverage, benefits, premiums, and any limitations or exclusions. By providing consumers with clear and comprehensive information, insurers empower them to make informed decisions about their healthcare coverage. Additionally, consumers have the right to file complaints or grievances with the Delaware Department of Insurance if they believe their rights have been violated. Question 117. Which of the following practices exemplifies fair marketing and sales practices in the context of health insurance in Delaware? A. Misrepresenting policy terms to make them appear more favorable to consumers. B. Offering incentives to agents for selling specific policies, regardless of client needs. C. Providing accurate and unbiased information to consumers to help them make informed decisions. D. Pressuring consumers into purchasing coverage they do not need. Correct answer: C. Providing accurate and unbiased information to consumers to help them make informed decisions. Explanation: fair marketing and sales practices in Delaware require insurers and agents to provide accurate and unbiased information to consumers to help them make informed decisions about their health insurance coverage. This includes disclosing all relevant details about policy terms, coverage options, premiums, and exclusions, without misrepresentation or deception. Agents should act in the best interests of their clients, recommending policies that meet their specific needs and circumstances rather than pressuring them into purchasing unnecessary coverage. By fostering transparency and trust, insurers contribute to a fair and competitive marketplace for health insurance in Delaware. Question 118. Which of the following is an example of a supplemental health insurance product commonly offered in Delaware? A. Homeowners insurance. B. Life insurance. C. Disability insurance. D. Dental insurance. Correct answer: D. Dental insurance. Explanation: dental insurance is a common supplemental health insurance product offered in Delaware. It provides coverage for dental care services such as routine checkups, cleanings, X-rays, and other dental procedures. While health insurance policies may include some coverage for dental care, standalone dental insurance plans offer more comprehensive coverage specifically tailored to dental needs. In Delaware, individuals and families can purchase dental insurance plans to complement their primary health insurance coverage and ensure access to essential dental services. Question 119. What are optional policy riders and endorsements in health insurance, particularly in Delaware? A. Additional benefits added to a policy to enhance coverage beyond the standard policy terms. B. Penalties imposed by insurers for late premium payments. C. Mandatory requirements for policyholders to undergo health screenings. D. Restrictions on coverage for pre-existing conditions. Correct answer, A. Additional benefits added to a policy to enhance coverage beyond the standard policy terms. Explanation. Optional policy riders and endorsements are additional features or benefits that policyholders can add to their health insurance policies to enhance coverage beyond the standard policy terms. In Delaware, insurers offer various riders and endorsements that allow policyholders to customize their coverage based on their specific needs and preferences. Common examples of optional riders include accidental death benefits, critical illness coverage, and increased coverage limits for certain medical services. By selecting optional riders, policyholders can tailor their health insurance policies to better meet their individual healthcare needs and financial circumstances. Question 120. Which of the following insurance products provides coverage for expenses associated with critical illnesses and long-term care needs in Delaware? A. Term life insurance. B. Disability insurance. C. Critical illness insurance. D. Dental insurance. Correct answer, C. Critical illness insurance. Explanation. Critical illness insurance is a type of insurance product that provides coverage for expenses associated with critical illnesses such as cancer, heart attack, stroke, and organ transplant. In Delaware, critical illness insurance policies typically pay a lump sum benefit upon the diagnosis of a covered critical illness, which policyholders can use to cover medical expenses, living expenses, or other financial obligations. Additionally, some critical illness insurance policies may offer coverage for long-term care needs, including expenses related to nursing home care, assisted living facilities, and home health care services. By providing financial protection against the high costs of critical illnesses and long-term care, critical illness insurance helps individuals and families in Delaware safeguard their financial well-being during challenging times.